Siddhant, we are beginning the session. Before it, like since this is the first session, I just wish to know about everyone. A little background will help me at what level I'll be talking on SBR. So just share with me, like if you're directly going to appear for SBR, or if anyone among you has already done paper FR. Like many of you may be joining after CA or after CA final. So you may not have appeared for FR. So I just wish to know from the audience, like just give your name, experience, and qualification status, like that will help me better. So just share it with me, just name, qualification, experience.
Hi, sir, this is Joseph here.
1 second. You can rename Shelja. You have a chance to rename yourself as well. Instead of writing in the chat box, it's better to just tell me. Yes. So we can begin with, yes, Joseph, you were saying something.
Yep. So, in fact, I qualified my CA in 2014, and okay. I'm writing the exam of SSCA for the first time. I'm planning to write in June 2022.
So you'll be appearing SBR for first time. Okay.
Yep.
Okay, thank you. We'll take 10 minutes, but this will help me know like at what level I need to talk. Yes, Karishma. So it's not a dropout, it's continuation, like Palak. Maybe you'll complete it later. After doing ACCA, we get confidence that we are easily in a position to even appear for our CA final paper. So I won't call it, yes. Finalist is a better word, and in continuation of our degrees is a better word. Like we may never know when we may complete our remaining papers. It becomes easier after ACCA papers. That's what I have experienced.
Good evening, sir. My name is Sachin Jindal.
Yes, Sachin.
And I'm a qualified CA. I qualified in 2018, and I will be appearing for the ACCA exams for the very first time.
Okay, thank you so much, Sachin.
Good evening, sir.
Yes, good evening.
My name is Salja Agrawal, and I have qualified my CA examination in the year 2018, and I am appearing for the first time for SBR.
SBR, okay, thank you so much.
SBR.
Yes.
Hello, good evening, sir. I'm Siddhant Chawla.
Yes,
I am a CA finalist, and I am appearing for the SBR paper for the first time.
Okay, thanks, Siddhant. So did you by chance anyone appear for the CA final paper based on NDS, or it was through the old syllabus?
For the old syllabus.
Okay. Okay, thanks.
Hi, sir. This is Mohit Pava. I'm a CA finalist too, and I have given my CA final in the old syllabus and just given APM paper recently.
Okay, so you're also appearing for 4 papers of ACCA.
Yes, that's it.
Okay,
yeah.
Thanks. Yes, next.
Good evening, sir. I am Aman Mansal, recently qualified chartered accountant in 2021 and giving SBR first time.
Okay, thanks, Aman.
Hello, sir. Siddhant here.
Yes, sir.
So I have cleared my CA in July 21, and I have joined BSR and company currently, and I'm giving ACCA exam for the first time.
Okay, thanks. Next.
Hello, sir. My name is Kanika Reddy. I appeared for CA final in December 21, but I couldn't clear. So I'm a CA finalist, but not yet clear with both groups. So I'm appearing for SBR for the first time.
Okay, thank you so much. Next.
Hello, sir. My name is Vritti. I am also a qualified chartered accountant, cleared in 2016. So giving SBR paper directly for the first time.
Okay, thanks, Vritti. Anyone left?
Hello, sir. My name is Palak. I am also a CA finalist. I did give my exams in December 21 and 22, and I couldn't clear it. So yeah, that's
and Palak, especially for you, did you notice that there are chartered accountants also in this group?
Yeah, I noticed it's It's like
Okay.
I was giving old group and I did so much of hard work for CA. So it's like a little disappointing sometimes.
So you are one of the few lucky ones, or I would say few of the smart people in the country who knows what to do in case they are stuck, in case they change their direction. So you're not changing the direction, you're simply adding on something. So you're not reducing anything as part of your journey of CA, you're simply adding on something. So don't have any regret that you're dropping out or then you're choosing ACCA. It's not a dropout, it's adding on to your existing qualification. And seeing that there are chartered accountants in this group, like you should feel lucky about it, that you are open-minded, that you added on, you did not get stuck, and you decided to accept this change. Okay, and I would recommend that don't think that you will not be appearing for your CA final papers. You will be very close after your ACCA examinations. It will be very easy for you to even appear for your CA final examinations, because the only thing which will be different in your case will be that there is no fear of losing, because once you have one qualification which is of international level, there will be no fear of losing. And once you lose this fear of losing, you'll be winning in your CA final papers as well. So take out this from your mind that you're going to drop it out. You're not going to drop it out. You'll be a winner in the end by having two qualifications, because even chartered accountants are pursuing ACCA. So why would you leave something like on which you worked so hard, have invested so much time? So don't leave it. Okay, just do it after your ACCA is complete.
Okay.
And feel confident. Just be confident, remain confident, because no one can take away the number of years you spend or hard work you have done like from you. So there should not be any questions asked about it. So you've done so much, so just be confident about it. Okay.
Okay, sir. Thank you.
Yes, next.
Good
Hello,
evening,
sir.
sir.
Yes.
Yeah, good evening, sir. I'm qualified chartered accountant, cost accountant. Now I'm writing this ACCA SBR paper first time.
Okay, thank you, Rakesh. Yes.
Hello, sir. Good evening. I'm Divya Arora. I'm qualified chartered accountant from 2016, having post qualification experience of almost 6 years. So I'll be appearing for SBR exam directly for the first time.
Perfect. Thank you so much. Yes.
Yeah, hi, Amit. Hi, all. This is Karishma Mittal. So I qualified as chartered accountant in 2017. I have post-qualification experience of 4 years. I'll be appearing for this SBR for the first time.
Okay, thank you. Sneh, you introduced Sneh, Akanksha. And
hello. Hi, everyone. My name is Vidushi Solanki. I'm also a CA finalist, and I'll be also appearing for SBR directly. As in, this would be my first exam.
okay, thank you.
Thank you.
Vivekanand.
Hello, everyone. I am also CA finalist. I will be appearing for SBR paper directly.
Thank you. Sneh, Soumya, Akansha, have you introduced?
Hi, so this is Swati, and good evening to everyone as well. I am a chartered accountant from May 17. This is my first time I'll be taking my exam for SBR.
Okay, thank you.
Hello, sir. This is Soumya. I completed till F8 and I gave my F9 in March 2022. And I'll be giving SBR in June 2022.
You have gone through FR syllabus, right?
Yes, sir.
So you need to have some patience like during these sessions, because to cater to the people like who are appearing for first time, I'll have to go dig down again, like go back to the basics of FR as well.
Yes, sir.
Okay.
Thank you, sir.
Okay, no worries, Sneh. I hope you're able to hear me at least. Okay, perfect. No worries. Set it right till next class. There was one more who has appeared FR paper. I noticed in the chat box. Is there anyone in this group by chance like who has attended my classes on IFRS at some point? So there was one more who has appeared for FR. So this was only one, and there are only two students like who are already having some knowledge of financial reporting based on IFRS. So can I treat you like layman's, like who do not have any knowledge relating to IFRS and begin from scratch?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, Karishma, 1 second. Yes, you can speak up.
Yes, sir.
You
I
wanted
was
to?
saying, yes, I have not read IFRS earlier.
Okay. So share a bit about me. Like, so this is ACCA Amit Kumar, and I got to know about this qualification in December 2007. So I started pursuing it after my BCom, like 2 years after my BCom, and I got my first job in 2009. And my job was to train Indian chartered accountants, MBA, finance professionals, or whoever is working in the corporate to train on the subject of IFRS. Since then, I've been training on IFRS, mainly diploma in IFRS. So I have worked with the first company that we worked with was Ajit Adhikari. The first company we worked with was Pyron Corporation. Then I moved to Axis Consulting for some time. Later, I was part of KPMG. I started the first ACCA Institute in Delhi in 2012, and I was kind of competing KPMG in 2012. So after 7 or 8 no's, I joined them in 2014, and I was with them for 3 years during the peak season of IFRS, like when India was implementing IFRS. So the reason for my job in 2009 was that India was supposed to move to IFRS in 2011, but it got postponed. So my career of training also got little lengthier, and we were training on IFRS in KPMG to all the clients, like where we implemented IFRS in the name of Ind AS. So Ind AS is the term used for IFRS in India because we call it converged form of IFRS is known as Ind AS in India. So till 16 I was with KPMG. Later I moved to DMF Group as knowledge management head, and in the same year I was appointed as Director Accounting Advisory Services BDO India. After spending 2 years in BDO, I moved to Dehradun. Now I've started my own business school. I cater to ACCA qualification for the youngsters. Like, I continue to serve the professional world. Like, that's how I'm part of or being with you, because I continue to serve the corporate world on IFRS subjects, teaching the professionals. Here I don't teach the professionals directly, so that's not the area I'm catering to. I'm focusing on the youngsters immediately after 10th, 11th. So with you, like, since I do not cater this market directly, like, so I'm glad, like, I'm associated with VG Learning Destination. So through them, I'm still being able to be in touch with the corporate world. And I teach diploma in IFRS on the weekends, and I'm still in touch with the corporates, keep on doing corporate trainings, and that's how my life goes by. So this is a brief about me. I'm also an author of a book on Ind AS. In 2017, I felt that the CA final students who are learning Ind AS, and even the CAs who are not getting to know where this is coming from, I thought to help them out through a summarized version of IFRS. So to share it in India, I had to call it Ind AS concepts in one day. So which did really well, and which became one of the reasons for my job as Director Accounting Advisory Services. I was leading the accounting advisory setup at BDO India in Delhi. So this is all about me. I consider myself, so you can say that I consider myself one of the best in IFRS in India, because I'm one of the few people who started learning IFRS or teaching IFRS in 2007. And I think one of the most experienced, like having around 14 to 15 years of experience of learning IFRS. In that sense, having spent around 11, 12 years into training on IFRS. Okay, so be assured that you are with the best. You simply need to put in your efforts now to be the best version of yourselves. Okay, so don't waste your time trying to judge me. If you want to know about me, you can search it on Google. I'm available, though I'm a resource like who's not very well known in the student, among the students. Like the corporates know me well, because I spent most of my time among the employees, among the senior people who are working in the corporates. Okay, so let's begin. Anyone having any questions? Anyone having any questions?
Sir, like most of the students are qualified, but minority is the non-qualified ones. So, like, what would you advise them? Because, like, obviously they would have not qualified CA, then they shifted to ACCA, and now they're seeing a ray of hope here. And there are many students like me. So, like, how would you guide them further? And is this the right step to like take this SBR as first subject? Because it is based on IFRS, and I am particularly like I have given from old course and I have no idea about IFRS and anything. So like obviously my confidence is also low at this point of time. I've like taken a very hard step in moving on from CA to ACCA, and like I would like to know your insights on this, because I think you're not a chartered accountant but only ACCA. So like how do you feel this, like, because in India the chartered accountants are valued more, because obviously it's an Indian degree and it's in India. They would prefer their degree amongst the like global degrees first. It happens with every country. So like how do you guide us, and how do you value both degrees?
So Kanika, it totally depends on your attitude as well, like how you feel about yourself. Like if you feel low, if you feel that we are not better off until we complete CA, if you notice like the people are same, the knowledge is same, but the only difference is that the result declares that you are a CA, but the same person having similar knowledge, having more, like having the same strength and everything, but simply the letters like CA not attached to their name, they feel low in their life, and they allow that pressure to get inside them from the society that they are not CA yet. But deep inside, they clearly know that there's no difference between the people who are cleared, and there is no difference between them as well. Okay.
Right.
In my case, I joined ACC after my BCom, and I knew that if I get into CA at that point of time, I would have been sitting in some class. And I thank God that I did not do CA. I thank God that I did not get admission into my MBA. Like I was thinking of like commerce students, like when they don't think of CA, they think of MBA, and I was also one of them. I thought that I should get into an MBA college, but luckily I didn't get the percentile required to be among the top. The third thing was to go abroad. My family didn't allow me, though I wanted to go abroad after +2 is the reason I didn't do CA after my +2. And after my graduation, when I tried, and another lucky reason was my village was in a remote area, so which resulted into collecting my IELTS certificate from British Library, Chandigarh, where I got to know about this word ACCA. And I took a blind decision that since I had no chances, even I was late in civil services, I was late in CA, I was late in MBA, I was not even up to mark with the engineers like who were ready for clearing crack or cracking CAT. I was nowhere closer to them. So it was 2 years after my BCom, I was struggling or looking for a career, and luckily I got this word ACC. I had no idea that this is going to be a big word or big thing in my life tomorrow. Today, when people meet me, they feel that I'm luckier. So I would say the same thing, that you are the smartest people in the room who have opted for this, because if you have been sitting on the corner waiting for your CA result to become CA someday, you've taken a decision to take control of your life, because by ACCA you'll be able to take control of your life by simply passing 4 papers. You'll be considered equivalent to qualified chartered accountants, because this word chartered itself came from UK. So if someone tells you that you are not a chartered, like I think they're mistaken, because the word chartered is coming from UK. ACCA is the body which was established in 1904. So we were established 50 years before CA. So being in India, definitely, like if to command respect, CA is highly respected. So to prove a point that if you are not a CA, you're not worthy, that totally depends on your attitude. Like in my attitude, I was a fresher part qualified ACCA. I joined my first job after 9 papers of ACCA. I joined after BCom 4 papers exemption. After 6 papers, I got this job to train Indian CAs. Now imagine my state, like there were 52. My first session was at Ashok Leland, Chennai. There were 52 chartered accountants sitting in front of me. I was part qualified ACCA, joining ACCA after BCom, that to 2 years after BCom. But I never believed that I'm lower than anyone. Luckily, I was not around the people like who were pursuing CA that point of time, because if I would have spent some time with them, they would have made me believe that if you're not CA, you're nothing. So thankfully, I was not among them. And my senior, like he used to do the initial lectures, and one day he gave me a break to do session on consolidation. And after the session was over, he asked me this thing, like that what was the feedback. So I'll tell you in Hindi. I said, "Sir, पूछ रहे थे हीरा कहाँ छुपा रखा है?" So he got offended a little bit, because he was my senior, like he was the executive director, and I was just a fresher joining this company. So I said, हीरा कहाँ छुपा रखा? पूछ रहे थे हीरा कहाँ छुपा रखा है? तो he said, तुम हीरा हो तो मैं क्या हूँ? मैंने कहा सर हीरा आप भी होंगे, बट कोहिनूर की बात अलग होती है. So this was my attitude as a fresher, challenging the senior most person, and which I carried along, that superiority I carried along. So I would say the same thing to you. You need to feel superior inside, like, because the world will keep on telling you that you're not worthy enough. Okay. And when I was standing in front of 52 chartered accountants, I was just looked up in the sky and I believed that this is me. This is going to be my career tomorrow. And I think I'm on the right boat. I had doubts on ACCA qualification, but I believed in one thing, that there are 52 chartered accountants sitting in front of me. There is something good happening in my life. I should simply run. And I joined my first job in 2009, but I reached the level of director in 2017 September, within a span of 8 years, when people only go assistant managers or managers. In this stint of last 10 years, I've left my job 3 times. I've started the first ACCA institute in Delhi, then I again started in Gurgaon. Third time, I thought I should leave the city now. I've moved to Dehradun, and I'm building my life again from scratch. So it totally depends on your attitude. Not degrees don't define you. You are defined by your own metal. You're defined by how you think. If you think how people want you to think, then you're not worthy of taking up challenges. Just be you. If you have decided, just respect it. Now, don't doubt about it. If you have decided to be ACCA, just respect it. And I would recommend most of you, don't consider yourself a dropout. Don't call yourself a dropout, and pursue CA as well. Okay. So whatever medium you take up, so I would say, even I suggest the students who are pursuing CA after 12th, I recommend them to pursue ACCA along. Don't commit this mistake. Be the smart person in the country. Be among the smartest people, because your CA will anyway take 5 years after +2. Become ACCA by the time you're graduate. Increase your salaries and pursue, and by the time also complete your articleship. Increase your salaries on the basis of ACCA and continue pursuing CA. Okay, so that's the suggestion I give to the youngsters as well, like who are joining ACCA after 10th, 11th, or 12th. I recommend them. People say that we are intelligent. I said, use it wisely then. If you're intelligent, why to get frustrated later on in life? If you're intelligent, pursue 2 degrees at the same time, because the syllabus is complementary. The CA final syllabus changed in 2019. And I've been teaching that stuff since 10 years now. I was directly invited by an academy to be part of their platform for CA final financial reporting. I'm the only ACCA, I think, on an academy teaching CA final financial reporting. And my only demand was that my name has to be ACCA Amit on the Unacademy platform, to prove that it's not the degree, it's the knowledge in you, it's your personality which will drive your profession. So degrees don't define you, and you all are smart. Like, ask any CA, like, why did they pursue it? So you'll get this answer. Like, anyone who's joining ACCA after CA, like, what is the reason behind it?
Sir, may I speak something?
Yes.
Actually, CA, I speak in Hindi. CA इतना लंबा हो गया, तो हम update नहीं हो पाए. We are not updating, and this course is updating us by pursuing this. And companies are demanding new knowledge like IFRS, Indes. That's why degrees.
Yes. Thanks, Aman. So we'll not get into the debate of which is superior, which is inferior. Both the degrees are superior. Both the degrees are equally equivalent. Like, I turned lucky. Like, if you say, like, when people look at me, they feel that I got to know about ACCA 15 years back. I get people in 2022 who say that I've not heard about ACCA. So then I jokingly say it sometimes. मुझे 2007 में पता चला, आपको 2022 में भी भगवान नहीं बताने की कोशिश कर रहा है, तो इसमें मेरी गलती है कि आपकी गलती है, या कर्मों का फल है कि कोई चीज अगर हमें नहीं पता लगी, पहली बार पता लग रही है, तो respect it. Like that, the day you get to know about the opportunity, isn't it? I got to know about this opportunity in 2007, and there was no institution in the country. So there was only one institution in Kerala, and the first thing I did was I booked my tickets for Kerala, went home and declared that I'm going to Kerala. I did not ask, because I was not at a point in time wherein I had to ask that shall I do it or not. I simply declared that I'm going to Kerala. So I took some bold decisions in life, like, which really helped me build my career. It was not the normal stream like which people were pursuing or doing offbeat things. Like, I belong to Rajasthan, Shri Ganganagar in Rajasthan. I studied in Hisar and Chandigarh, and then I had gone back to Ganganagar again for pursuing college. I did not go to college even a single day. and then again came to Chandigarh to try for CAT, then moved to Kerala for 1.5 years. Then I used to think that the moment I'll get back to Delhi, I'll be getting a job, and I got a job. I even also didn't know that why they have hired me. And the reason for hiring me was that I had knowledge of Ifrs. The employer is telling me that we need you. I said, why? You have knowledge of Ifrs. I said, what is it? So for me, it was the accounting paper, which I did F7. And for the employer, it was an Ifrs knowledge, which I have being a pursuant of ACCA. Okay. So I'll be sharing everything with you, Kanika. I'll be sharing how to take decisions, how to focus, how to be better version of yourself. So these classes, I think, will not only help you in cracking your SBR, but will also, if there is any doubt, like you can always reach out to me, how to feel confident, how to think, what to think in a particular situation. I think I've done all that in the past 10 years. I've disrupted my life 3 times. And that too, whenever I left my job, like I got a bigger offer. This time again, I had an offer from London, but I declined it this time because I wanted to do something being here in India. I wanted to support the people. Like, since I've supported the failures in the last 10 years, whosoever were failing in ACCA, I felt it's my duty, like being one of the first ACCAs in the country, it's my duty to support and continue to support whosoever is pursuing ACCA in India. So I consider it as a moral or personal responsibility. Since I got a lot from ACCA, my life got set because of this word. And the word Ifrs is something like which is synonymous with me. I've written on my profile that Ifrs is passion, and people doubt about it, that what does it mean? Okay, so let's move on. I think this first day initial discussion is important for you to also believe in me, and for me to believe in you all, that we all are going into one direction. We will prove, like you can consider yourself as, we will prove that our knowledge is reflected in our results. And I'll not use the term work hard, like work hard. Why do we need to work hard? I'll not ask you to dig deep 6 feet of some, like I'll not ask you to do some labor work. Like it's simply work for us. Like, but we have complicated things so much that we call it hard work. Like there's nothing known as hard work. We simply work to reach our goals. Our job is to simply study this paper. Don't call it hard work. Do it consistently. Study every day, and just simply enjoy your journey. And since you've decided, please respect your decision. The only mistake people do is that they decide, then they're doubtful. Shall I do? Shall I not do? Have I opted for the right course? I think I should have opted for CPA US. Then there'll be people around you who will be telling you, instead of this, you should have done CPA US. Like, who stops you? Like, do CPA US as well tomorrow. But if you've decided for it, like just respect it for the moment you are in here. Don't waste your time. Don't kill your time thinking things which are unnecessary. Just focus, study, clear it, crack it, prove that you're the best version in ACCA. And later on, if it is required, prove that you're the best version in CPA US as well. Who stops you? Go for CFA, go for any other degree you want. But whatever you're doing, just do it in the best possible manner. Don't have doubts about it. Respect your decision. And I can assure you, this is one of the best decisions for someone who is in CA final. One of the best decisions ever taken in your life, because this will mold your career. This will give you a new direction. This will give you confidence. This will make you believe that you are not a failure. So if people tell you that are you a dropout, don't tell them that you're a dropout. Tell them that you're going to complete CA after ACC. Because this will also, you will lose confidence that you're a failure since you moved to this. You're not a failure. And if someone tells you that you are a failure, I think ask people to come so far, like fail 3 times or 4 times. It's not possible. Even that's an achievement, like, because you learned from every failure, isn't it? No one can be like you. You are unique. With your failures, you are a personality like who cannot be beaten easily. Like when you go into the market, you will be a tough candidate to beat too, because you have failed so many times. So failure is simply a step we need to grow as an individual. Like, but I don't know, our society has made it so complex that someone has failed is not worthy enough. No, we are the best. Okay. I failed so many times in my ACCA papers. That's not a concern. Any questions, anyone? I think you got that much needed boost like in the first session, which is required to pursue this qualification and to believe in it, right? If anyone got offended, please forgive me. that they did not needed this gyan, because it happens, like all the people may not like it. Okay. You can also message me privately. I will appreciate it and will be careful in future classes.
Hello, sir.
Yes, Siddhant.
Sir, I have a question. Actually, I am currently working in a KPO that is a US and Norway based, and the accounting is very normal. There is nothing as such use of IFRS or nothing. Any, not I'll say, not a kind of a knowledgeable job, I'll say. This experience will definitely help me to move ahead my career?
Any experience gets counted. See, any experience you've done has added something to your profile. You cannot outrightly say that you do not learn anything. And the opinion you make is because people around you say so. Okay. Because if you wouldn't have enjoyed this work, even if it is easy, if your life is easier and if you are able to earn your bread and butter easily, what's harm in it? If you get a bigger opportunity, just take that up. But while you are continuing this job, why get frustrated when your life is so good? Isn't it? It's an easy life. You go to a job, the job is easy for you. You're easily able to do your work. You're a happy person, I would say. Why get bothered? Keep on looking for opportunities. When you get that opportunity, just join it. And this will also get counted. But we unnecessarily give pain to ourselves. Like, this is something to rejoice, I guess. This is something to enjoy. And you're enjoying your days. You're getting family time. There's something more to it, isn't it? So we are not on earth, I think, simply to work. Like, we are here to keep on looking for opportunities, keep on doing the good work. And if you think good, if you feel good, you'll get better opportunities as well. But don't have lesser gratitude for the work which is giving you bread and butter now. Okay. Got it, Siddhant?
Yes, sir, rightly said.
We should be thankful for what we have, like then what could have happened. Like, if you're thankful for what you have, you'll get more. But if you're not thankful for the things you already have, why would you get more? Because you'll be frustrated again in that something new thing as well. So be thankful, remain cool and calm, simply enjoy your journey. You'll get better things as well. Because when you go for interview, if you're frustrated, that will reflect in your interview, in your confidence. But if you're happy about what you're doing, your confidence will reflect it, and the interviewer would want you to be part of their journey. But if you're already frustrated in your current job and if you're not happy about it, do you think you'll be able to crack interviews as well? No, it's not possible at all. Okay. Yes.
Sir, about the subject, like, are you going to discuss about the preparation strategy and everything, like time required? So
do you think, like, having spent this half an hour with you, do you think I'm going to leave any stone unturned?
So I wanted to know about the subject and like the preparation time required, because I was thinking, like, along with job, is it like possible that we keep on doing job and we just clear all the 4 papers left, and like how much is the time required before a particular exam that we should take leave from office?
You need in total 100 hours for every paper.
Okay.
60 to 70 hours or 80 hours you'll be spending with me. At least 20 to 30 hours you should spend on your own. That 20 to 30 hours expected of you is the practice time. You should pick the questions and learn, or you should read alongside. Or maximum, if you want to do more, maximum 110 or 20 hours maximum is enough for you to crack these papers.
Sir, can I say something? Because this is Mohit. I totally second your opinion, whatever you have said. As Kanika, I can see like is a bit confused and kind of not in a correct state of mind currently, but I just give her a brief overview of myself. I've got somewhere around 15 years of work experience in the industry in MNC. And Kanika, believe in me, I'm working with chartered accountants day in, day out. They have got no feathers at all. We're working, they are doing the same thing as we are doing. So it's nothing that we lack somewhere. It's just like the degree is not there, but don't feel like you are less from anyone. And apart from that, apart from the studies, what I feel is ACCA is more into practical base, wherein I have studied CA, wherein the CA asks for particular theoretical things as well, like what are the features, what are the, you have to mug up and write those things over there. But in ACCA, believe in me, if you just showcase your knowledge, that you know the concept, you will get marks and you will get cleared. That's what I have given my PM paper. I have left 25 marks in question in the paper, but I still able to pass that paper. If it would be a CA, I would definitely have flunked. So I can surely say that I'm pretty much confident of doing an ACCA, and I think I'm blessed to have taken this decision after failing CA 4 times. So I felt that I'm on the right path, and sure, Kanika, you are also.
Yeah, right.
So then this was helpful, Mohit, like much needed, I guess. So I think I asked one more question as well, like share your experience as well, which will also give confidence to people. This is the reason I keep on asking name, qualification, and experience, like, which helps a lot of people.
So my name is Mohit Pava, and I'm into 15 years of work experience. I've worked big companies, started my career with Genpact, spent 6 years over there, and then moved to HSBC. I've done the IFRS 9 reporting over there. Some sort of, when IFRS was coming, IFRS 9 was implemented in HSBC. So part of that transition. And then I moved to British Telecom. There I spent somewhere around 2 years, and then I've worked with IHG, Intercontinental Hotel Groups. I was part of an FP&A team over there, and now I'm again back to Genpact. So I have seen the industry in and out, and they if you're applying, want to have a job, they will just simply say CA/ACCA/CPA. So our degree is nowhere less.
It used to be lesser, like, but when we entered the corporate, we ensured that it has to be CA, ACCA. So it was done like purposely by us. Before I left BDO, I ensured that it has supposed to be approved employer of ACCA. So I think we also contributed in this change.
Yeah.
To make people believe that yes, we are on the right path, and so our confidence also made people believe that we are on the right path. Okay, so I'll move on to the content now. Let's begin the journey. I'll just change my background. Ajay is asking me to change the background, so I'll just change the background to some white image. And let's move on. So do you have access to the previous recorded lectures as well, or not, of SBR? Like, did you get access to them?
No.
No, sir.
Okay. Then I start fresh, because I thought I'll take the workings I did for the last batch. One second. So you're appearing in June. That's decided. Is there anyone planning for September?
Sir, actually, my mark sheets are pending yet to be received. So it depends on the mark sheets. If they are received, then I will definitely go for March. Else, I have no option than September.
Okay. Allow your mind to relax a bit. It is only stopping it because you're still confused.
Sir, I have just one request. Is it like, do we have only evening classes? Can we have them in the morning? Is that a possibility? Or is it just like scheduled this way?
It is scheduled this way, I think. I think that must have been asked with everyone. So that's
No,
how it is.
No, we have not got any
No,
choice.
sir, the
It's
time
just,
is not asked, but they just told us that time will be
it's an
6:30.
evening class.
So since I have my sessions in the morning, like, so I said in the morning time, I'm not available. So I think is the reason this is the time selected. Or what time do you think is more suitable? But this is the time normally, like we have been doing it in the past as well. Like last time also, I think I did the same timings.
We believe like morning 8 started would be a good opportunity because we are start fresh a day. Morning is good.
Yeah, sir. I would also prefer a morning session, if it is possible.
So we can talk about it. We can talk to them that if we can change it, we'll definitely discuss about it. Okay. So I'm sharing the screen with you. So there is always confusion. Like Sneh immediately writes, morning is not okay with him. I don't know like how it is going to happen. Let's for now. Again, we did the same thing. Like we looked into the future, then let's enjoy today's session. And then in this week, like we can decide what to do. Okay. So just open up that book. I'll share a brief about the paper. So SBR is the only paper like which is not exempted for ACCA. All other papers we get exemptions like relating to financial management, costing, audit, tax, we get exemptions, but this is the only paper which is not given exemptions because this is the paper we need to learn since everything is driven by accounting. So this is essential paper, strategic business reporting. If you're able to see my screen. Last time one of the student like failed by mistake UK exam, but somehow luckily even passed that paper as well. Okay, Sneh. You're working on Saturdays. Is that the case? So this is the syllabus of SBR. If you notice, like this is expecting that we should have knowledge of the basics of IFRS like PP. We should have knowledge of the basic standards based on assets. It's covering non-current assets, but at higher level. So mainly it is different from the fundamental level paper is that the new things get introduced in SBR paper. If someone has appeared for FR, it's a top up of FR paper. It is the third paper based on IFRS and ACCA qualification. The first paper is financial accounting. Second paper is financial reporting. And a top up of this is strategic business reporting. This is the third paper and final paper based on IFRS. The expectation in this paper is not very calculative. We do not have to prove our mathematical skills that we are very good in calculating or doing mathematics. Please be aware that this paper is expecting your capability to analyze a situation. The scenario you are able to analyze in terms of an accounting standard, and how to apply the knowledge gained to a scenario to be able to identify. Suppose we are recognizing revenue, and now there is a 5-step model in revenue recognition. If you are able to identify a contract, identify the performance obligations, determine the transaction price, you are able to know how much will be allocated to each component of the revenue item, and finally, how we'll be recognizing revenue. We are able to analyze the situation. If we are dealing with leasing, we should be able to analyze whether it is a short-term lease or long-term lease, and how it is going to be recorded initially in the balance sheet in the form of an asset or a liability. If we're dealing with income taxes, we should be able to comment on whether it will result into deferred taxes or not, and what is the reason it could not happen. If we're dealing with financial instruments, we should be able to identify whether it is a debt financial instrument, equity financial instrument, it is a convertible or compound financial instrument. What is the status? It should be measured at amortized cost. It should be measured at fair value. Your assessment should tell. So this paper is not very outright in the sense that it will tell you what to do. It will be expecting you to be in a position to now assess or do an assessment of what should be the correct accounting. So you have to behave like an accounting expert, like whose guidance is needed by the people who are doing the job in the real world in accounting. They're expecting your opinion whether the accounting done by them is correct or not. Or they may ask your suggestion that what should be the manner in which we have to account for a share-based payment transaction. This is the contract we recently entered into with employees or with the vendors. What is your opinion whether we should recognize cash settled transactions or equity settled transactions? What is your take on it? Then it moves on to building up the group structure. Like earlier we studied consolidation accounting only for one entity, like we acquired one entity, we had an associate or joint venture. Now we'll be moving on to discuss what if we were simply an associate, we were having a 30% investment, we bought 40% investment more, which gave us control over another entity. What will be the change in accounting? How do we account for this additional increase in acquisition of this entity? It may be reverse as well, that we were holding 80% investment in an entity, we sold a percentage of our investment, and we turned into a mere investment of just 15%, where simply a trade investment left. How to account for this loss of control? How to deal with non-current assets held for sale, or assessment of whether a joint arrangement exists or not. If there is a joint arrangement, whether will it result into an operation or a venture? If it results into an operation, which standard gets applicable? If it results into a venture, which standard gets applicable? How to deal with the foreign currency transactions? Then again, there is an assessment. Now, deciding a functional currency is not an accounting policy choice. It's an assessment based on the factors. What are those key factors which help us to determine that it is the functional currency of an entity? It's not an accounting policy choice. It's an assessment based on the factors. Deciding the functional currency, helping to know how to convert a foreign item into functional currency, how to convert the entire financial statements for the purpose of consolidation, how to deal with the group a statement of cash flows. There are just 3 or 4 additional items other than a normal cash flow which come into picture when we are dealing with a group statement of cash flows. And this thing is needed by almost every book requires this interpretation of financial statements, whether you're dealing with costing, whether you're dealing with financial management, whether you're dealing with reporting. And all these subjects expect you to finally be in a position to interpret using your profitability ratios, using liquidity ratios, using your other ratios to be able to comment on it, to be able to discuss in terms of financial figures. and also share the story around what has happened. So that sharing the story around can only happen through interpreting financial statements. That's the final thing we need to learn. And then we are learning full IFRS. But there is an IFRS which is available for small and medium enterprises, wherein we need to cut some bit of it. That's a blessing, Ajit. So we need to understand that how it is to be dealt with small and medium enterprises. Not everyone may be using full IFRS, but they may be working with small and medium enterprises where we need not require the disclosures required for full IFRS and may not require some complexities which are involved into SBR. So we cut down some of the disclosure requirements, some of the requirements, and it becomes reporting for small and medium. So this is for information purpose only. And then we also need to be aware of the recent changes, any updates, the current issues. We'll also be discussing about them. So this is the syllabus of SBR. But this is expecting that you already have knowledge of FR. So I'll be going from the very basic level, building up on all these accounting standards. So my idea of teaching is not to prepare you just for SBR. I'm also going to prepare you for the Indian market as well. I'll be preparing you on the subject of IFRS. Since I am not a PPT person, I believe in sharing the full knowledge of IFRS so that you can use it in your corporate world. You can use it for passing this paper, and we'll also be sharing some insights on Ind AS as well wherever required, so that this journey with me will not only be focused on just SBR, it will help you overall as well. Any questions regarding syllabus, anyone?
Sir, I have a question. Does the syllabus of does amendments come every year? Because on books we have seen it's for the applicable for 1 year only, like for September to June 22, like this.
So see, they have one open-ended area which they call current issues. So there are exposure drafts on accounting. There are current issues talked about, like recent current issue was COP26 relating to climate change. Sustainability Accounting Standards Board has been established, or anything new has come up, or anything being talked about at the global level. They do ask questions. Like they had a question relating to cryptocurrency last time. Okay. So Aman, you should use BPP material. I think that is better. So I'm referring a BPP book through their own site. Okay. So the only thing is that to avoid piracy, what they've done, like they don't give everything in the book nowadays, and they share they're sharing some bit of it in essential reading. Like if you noticed here, there is essential reading for the same topics, like in more detail they've discussed in essential reading, financial reporting framework, non-current assets, employee benefits. In this essential reading, they've discussed some bit of some information which is not directly given, but in financial instruments, in leases. So if I go to leases directly, so it talks about leases in detail thereafter. Some more information around it is given in that link. So it won't matter to you, Karishma. You can take the books now. Swati, it can be from accounting perspective, like how to account for carbon emissions, how to account for the wastage which goes unnoticed. That you are using 100 kg of material and then the product is only 80 kg, where is the 20 kg gone, or how to cost for it, input output analysis, ABC analysis. So there's a lot of things happening on the accounting side as well for recording the carbon emissions.
Okay, so
See, 90% or 95% of it is what is given in the book, or 3 to 4%. I will not even say 5%. Maybe something new from outside. So when you get spare time, you read around it. Like this time, there was something on. There was a question regarding the cryptocurrency among the current issues, like which were bothering the world. So this is clear, I guess. So if I talk about the paper, I'll just share with you. So this is how this paper is built up. Like if you plan to appear audit and assurance, some bit of it will also be tested, like the same knowledge, since your audit is dependent on accounting. So the accounting you learn here will be tested again in advanced audit and assurance. So this is the paper supposed to be given after SBR. So this paper is building up from financial accounting. As I said, financial accounting, financial reporting, and SBR is the paper which is being built up. 3 papers are there in ACCA qualification. This is a computer-based examination. So this is how the format is divided. So section A is 50 marks. So there are 2 compulsory scenario-based questions based on, it tells us like what they're going to test in what area. Based on financial statements of group entities, that means consolidation question will be coming in section A, and financial reporting issues, explanation of numerical aspects will be required. So 20 marks numerical aspects, and consideration of reporting implications, which I was talking about, that we need to guide, tell, assess implications of specific events in a contemporary scenario. So this is expected in section A. Then the next is section B, where there are 2 questions, which is from other accounting standards, like we can have from leases, we can have from PP, employee benefits, share-based payments. 2 full-fledged questions from income taxes may come up from the other 2 areas. This is how the paper gets divided. So first part is clear that it is going to be group accounting and other areas of financial reporting. Some financial reporting issues may also be part of the same question. They can club it. So question 1 is of 30 marks. 20 marks can be from other areas requiring consideration. So Prabjot, just get in touch with whoever has been in touch with you initially for being part of these courses. Just tell them, we'll guide you what to do. Okay. INT, we need to go for INT, international, not the UK one. We need to choose INT. This was syllabus and what we need to do. So IFRS is principle-based reporting that it's based on the conceptual framework. Like conceptual framework defines the 5 elements of accounting. Anywhere on earth, accounting is based on those 5 elements. So what are those 5 elements? They are assets, liabilities, equity, income, and expense. So the only difference in presentation is in terms of defining these 5 elements. It may be an expense for some jurisdiction or country, something which may be an asset for some jurisdiction or country, some accountancy body. So the difference is in terms of how do we view these 5 elements of accounting, whether in terms of expense or asset or liability, equity, or income. So the 5 elements defines accounting, and the difference in assessing them or viewing them creates a difference in accounting, creates a difference in different gaps. Otherwise, accounting anywhere in the world is similar. The debits and credits remain the same. That every debit will equal credit. That's a scientific reason which everyone holds true everywhere in the world. Now there is no difference in that. The only difference will be in the manner of presentation. So let's move on. So we can take a quick 5-minute break and then we can resume with this, because I'll be discussing it for another 1 hour or so. Okay. Just a 5-minute refresher break and then we'll discuss about introduction to IFRS. Yes, Viti, do you wish to say anything?
No, sir, sorry.
Okay. So let's begin with the session. So this is ACCA Amit Kumar and we'll discuss introduction to IFRS. I make sure that we discuss about introduction to IFRS so that we get to know that what is the reason behind learning IFRS or implementing IFRS and why it has become a phenomenon globally. So it happened in 1973. A group of around 9 countries decided that they should develop mainly the countries were US, UK, France, Germany, Mexico, and Australia, Canada. So they were part of these. South Africa was also part of it. Japan. They were part of those group of countries who decided that there should be uniform accounting globally. They also didn't have any idea that this is going to be a big thing tomorrow. And I've written earlier in my previous conversations, I used to say 9 countries, but now I call them 10 because Ireland has separated from UK. So Ireland was also part of it. Netherlands was part of it. So the 10 countries decided to move to IFRS. And if anyone is looking for opportunities abroad, like I would recommend them to be part of those 10 countries, like who were the initial stakeholders, like willing to develop uniform accounting. They'll give you more respect than anyone, though it is implemented globally now, but they value it more than, because their accountancy bodies were involved into developing these unique or uniform accounting standards. So they started a committee. They formed a committee known as IAC, International Accounting Standards Committee, which started working from 1973 onwards. And the first word they coined was IAS, International Accounting Standard. And they decided that whatever accounting standard they will be developing, they'll be naming it IAS. So the first requirement was to develop a standard for presentation of financial statements. So they developed IAS 1, presentation of financial statements. Then the next standard they developed was IAS 2, inventories. And they had developed standards like IAS 3, IAS 4, IAS 5, IAS 6. And the series continued. But I have marked them in red because these standards are either withdrawn or merged with other accounting standards. So they are no more relevant and applicable today. So if anyone by chance have gone through the list of IFRS, may have felt that the list is not complete, because the moment you start reading it after IAS 2, the next standard which is relevant and applicable today is IAS 7, statement of cash flows. Then it is IAS 8, accounting policies. Then we don't see IAS 9 in the list. The next standard is IAS 10. We used to have IAS 11 construction contracts till 2018, but from 1st January 2018, the new revenue accounting standard came into being, which is known as IFRS 15, revenue from contracts with customers. Now, being in the corporate, you must have heard about these new changes, like which were recently implemented. The new revenue accounting standard, the new leases accounting standard is talked about a lot. So the corresponding standards against them were, for revenue, it was IAS 11 and 18 were based on revenue. These are withdrawn now. So they've come into this list in red, like if you could notice, IAS 11 is part of this list, which is either withdrawn or merged. IAS 18 is part of this list. Earlier, they were relevant. Till 1st January 2018, they were relevant globally. But now they're replaced by a new standard known as IFRS 15. I'll also tell you the difference between IAS and IFRS, that what does IFRS mean? Do we need to learn only IAS? Do we need to learn both IAS and IFRS? What is the difference? So there are a lot of questions which goes on in mind. Yes, Aman, the 5-step model, which was recently introduced, and everyone in revenue accounting is bothered by it, is using the same accounting standard. There's a lot of assessment going on for implementing this new revenue accounting standard, which is implemented globally from 1st January 2018. So Kanika, you do not need to note down anything. I'll be writing it for you, whatever is required. I'll be sharing these Excel sheets with you so that you can focus on the content. Hope my speed at which I'm talking, is it clear? If I need to slow down, anything you feel is not going in the direction which is helping you, I should make it very clear that these sessions are a bit. Okay, Swati, I'll go a little slow. Because the content has been processed since many years, so I don't even get to know that I need to take a break and I need to slow down. So is the reason I keep on asking that, please tell me. This is not to showcase my skill. This is for you to be a better version of yourself. So if you're not getting it, if you're not comfortable, please highlight it immediately and don't get bothered that I'll get offended or I don't think anything. I just enjoy the process. I don't worry about anything. I entertain every silly and stupid question. I don't even judge you on the basis of whether you are a CA having 15 years experience, 20 years experience, 25 years experience. I don't care. I treat everyone as a layman, whosoever is part of my journey. Whether they ask a silly question or a stupid question, it doesn't matter to me. If it is bothering you, it is bothering you. Don't judge it on the basis of scale of stupidity. Simply ask it, just be comfortable. And if you're not getting it, please let me know. Clear? So sometimes any session is being mistaken as it is for me to showcase my skill. No, it is for you to learn. If you're not getting it, there's a gap. We are wasting each other's time. So don't get into that trap. Simply highlight. Okay. So anything discussed till now? Anyone having any question? An international body was formed in 1973. They also didn't have any idea that it's going to be a big phenomena tomorrow. ACCA is more relevant in this space because ACCA was the first body to include IFRS into their curriculum in 1996. They are the first body to agree to this change. Is the reason they are highly regarded globally, and they are the only body in the world who conduct a special diploma based on IFRS. All other accountancy bodies in the world started off very late in their life, like AICPA or even ICI. AICPA started after 2007 to conduct a test on IFRS. In similar manner, some accountancy body of England and Wales or Scotland, they also started late. ACCA was the first body, is the only body to conduct a diploma. Other bodies are conducting a certificate. The difference between the two is that diploma means you're not only knowledgeable, but you're also able to apply that knowledge. Certificate means that you're just knowledgeable in IFRS. So that's the basic difference between a certificate and diploma, and why ACCA matters more when it comes to the knowledge of IFRS. So these are the standards you'll not be finding in any of the lists today because they are withdrawn or merged with other accounting standards. When I say merged with other accounting standards, what do I mean? There used to be a standard like IAS 31. It used to be known as interest in joint ventures. This standard is merged with IAS 28, and IAS 28 was known as investment in associate. IAS 28 is now known as investment in associates and joint ventures. So sometimes they completely withdraw the standard, sometimes they merge that accounting standard with another standard. Like IAS 27 was separate and consolidated financial statements. Now IAS 27 is just separate financial statements, and IFRS 10 is the new accounting standard based on consolidated financial statements. So next standard is IAS 8. Now the reason for introducing, so they have been implementing or developing, not implementing, I would say they have been developing these accounting standards, and they developed a good number of accounting standards till year 2000. So IAS 41 was the last standard they developed. Like the series continued like this: IAS 1, IAS 2, 3, 4, 5, 6, 7, 8, 9, 10 until 41. But the list you see in the red is no more relevant and applicable today. So the series goes like this: IAS 1, IAS 2, IAS 7, IAS 8, IAS 10, IAS 12, IAS 16, IAS 19, 20, 21, 23, 24. That's how the series goes by. And this ended in year 2000. IAS 41 was the last accounting standard. But till then, they were not successful in getting it implemented. The International Accounting Standards Committee, which was formed in 1973, was not successful in getting it implemented till year 2000. Were not able to convince any of the accountancy body, any of the accounting country, any country to move to IFRS. They were not successful till then. The reason was this accounting standard IAS 8. Now, IAS 8 had this requirement that if there is any change in accounting policy, we need to apply the effect retrospectively. Retrospectively means as if we have been doing since beginning. So they were wanting these countries or accountancy bodies to implement IFRS in a manner as if they've been using IFRS since beginning, since their incorporation, since they started doing business for first time, which was acting as a big hindrance, and none of the accountancy bodies, none of the countries agreed to it. I think they realized their mistake, and in year 2000, they came up with a new body. In 2001, they established a new body. International Accounting Standards Committee became International Accounting Standards Committee Foundation. Today, it is known as IFRS Foundation. IASC Committee, which became Foundation in 2001, is having a simplified version today, a simple name as IFRS Foundation today. They decided to set up a new board, and they termed it as International Accounting Standards Board. Was established in 2001. And the first thing they needed was to develop an accounting standard which facilitates implementation of IFRS. Since this accounting standard was acting as a hindrance, IAS 8 was acting as a hindrance because it said that apply the effect retrospectively, that if you change any accounting policy, now we were asking these countries, asking these national accountancy bodies to change to IFRS, but which required that they'll have to apply IFRS as if they've been using IFRS since beginning, which no one agreed to. So the requirement at that point of time was to come up with an accounting standard which facilitates conversion, which facilitates moving to IFRS. So this new body was formed, IASB, International Accounting Standards Board. So the first thing they did was they introduced a standard known as IFRS 1, first time adoption of IFRS. Yes, Ayushi, I'll come to it. It means the same thing. I'll be coming to it as well, that how is convergence different from adoption. Okay, so have you used some bit of it today as part of your work life, as part of your Ind-AS, Ayushi? Can you comment? So where did you come across them? Like, are you using it as part of your work life today? Ind-AS 1, 2? I think your mic is not working, or what is the status? Okay. So you appeared for the new syllabus, CA final, financial reporting? Yes, perfect. And is it clear that group 1 is clear or is yet to be cleared? So this study, like after having spent this time with me on SBR paper, you are automatically prepared for your CA final financial reporting based on Ind AS as well. I'll tell you how it is as I progress. Okay. And it's totally different perspective. I don't know how you learned accounting in India, but luckily I learned directly IFRS and things changed for me. So my perspective of looking at accounting is totally different. So you'll definitely find it relevant and worthy and a different perspective for your learning, which will definitely help you to pass your CA final financial reporting paper with flying colors as well. So they came up with a new standard. Now it's like a new CEO, new owner coming into the office, and they felt that the word IAS was not very international in their terminology, International Accounting Standard. The term IAS, they coined a new term. They said we'll be using a new word now. So IAS 41 was the last standard they issued by the International Accounting Standards Committee. They came up with a new board known as International Accounting Standards Board. So today, ISB is responsible for issuing accounting standards. Whichever we are witnessing today are all issued by ISB. Now they are monitored by Ifrs Foundation. ISC took over the supervisory role. In 2001, they came up with this new accounting standard known as IFRS 1, first time adoption of IFRS. So that they hit hard on the limitation which was happening because of IAS 8. IAS 8 was requiring apply the effect retrospectively, which was acting as a hindrance for moving to IFRS or moving to new international accounting standards. So they worked on this area and they made it optional. They said that we're coming up with a standard which can be used by an entity once in their lifetime. When they are moving to IFRS, they can use this accounting standard. They can use the guidelines of this first time adoption of IFRS, and we give them relaxations in terms of mandatory exemptions and optional exemptions from applying the effect retrospectively. Now, retrospectively simply meant that suppose we are using weighted average method for inventory valuation, and if we change to FIFO method, we have to behave as if we have been using FIFO since beginning. That's the concept of applying the effect retrospectively. We'll behave as if we have been using FIFO since our incorporation, since the beginning of business, and apply it in a manner what if we would have been using since day one. So IFRS 1 gives relaxations on implementation of IFRS to the accounting policies. Like we'll be changing our PP, we'll be changing our leases model, we'll be changing our revenue accounting based on IFRS. So it gives us relaxation that we can apply the effect prospectively. We can avail for optional exemption. In some cases, we are mandatorily exempted from applying the effect retrospectively. So I call it a facility standard. This facilitates moving to IFRS, which was the turning point in the life of IFRS in 2005. European Union made it mandatory for the consolidated financial statements being published by any European country to be published based on IFRS. I think that was the triggering point. That was the trigger in the development of IFRS. Like these were the standards which were published. So they came up with a new term IFRS. So there's no difference in IAS and IFRS. What is the basic difference? The accounting standards issued before year 2000 are known as IAS. The accounting standards issued after the year 2000 are known as IFRS. Hope this is clear. Any questions, anyone? Any questions, anyone?
Sir,
Yes.
earlier we have studied accounting standards in CA final. That's in the old syllabus. Was there much difference in IAS and accounting standards that we have followed in India?
Siddhant, I should not be commenting on it because
there is a difference in the numbering as well.
I'll tell you. So this is a revolving thing. Like in India, we had a standard like operating segments. We borrowed it from IAS 14 operating segments. Okay. And operating segments was withdrawn by ISB. They said that US GAAP guidance is better. And they came up with a new standard known as IFRS 8 operating segments. What we should do now? We borrowed from ISB, IS 14. ISB borrowed from FASB, SFAS 131 for operating segments. What we should do now? So when it was the turn of India, when India moved to IFRS in the form of conversions to IFRS, I'll be coming on to that point as well. I have everything in my discussion, that when we use the term conversions, we say that we bring in harmony with IFRS. And when we bring in harmony with IFRS, we say that the standard developed in India is on the same lines using the similar conceptual framework as IFRS. So ISB gave this facility because the accountancy bodies were reluctant to adopt IFRS because they feel that that will make them insignificant in the country, that people will feel that they are no more required. So to maintain their significance, to maintain their relevance, and which is also necessary because without the existence of a national accountancy body in the country, who will raise the issues and concerns which are local if we adopt IFRS? So it's a good thing happening with our country that we did not adopt IFRS. We converged to IFRS so that there is a body which continues to work on the local problems, the local issues. They can highlight it, they can fight it, that they will be, they will not be using as guided by ISB, they'll be using their own methodology, but which makes them 90% of IFRS is similar to Ind AS. So in India, when we implemented, we coined a new term known as Ind AS. In Singapore, they termed it SFRS. In Australia, New Zealand, they termed it ANZFRS. But all these countries have moved to IFRS in the form of convergence of IFRS. Convergence simply means that bring in harmony with IFRS. So ISB demanded one thing, that you have to name the same number, same name, and prefix you can use on your own. So if it is IS1 presentation of financial statements, it will be Ind AS 1 presentation of financial statements. It will be SFRS 1 presentation of financial statements in Singapore. It will be SFRS 1, ANZFRS 1 in Australia, New Zealand, presentation of financial statements. If it is IS2 inventories, it will be Ind AS 2 inventories. It will be SFRS 2, it will be ANZFRS 2, all will be inventories accounting standard. If there is no IS3, there will not be any Ind AS 3, there will not be any SFRS 3. If there is no IS4, no IS5, no IS6, the next accounting standard is IS7. So next accounting standard in Ind AS series will also be Ind AS 7, Ind AS 8. The series continued till 41. The series continued till 41. IS1, IS2 ended on IS 41. So what will be the corresponding standard in India against IS 41?
Ind AS 41.
Ind AS 41. SFRS 41. ANZFRS 41. That's how it happened. The next standard in the series is IFRS 1. What do we do now?
Ind AS 101.
Ind AS 101, since it is out and open. So I used to get a varied answers like 3 years back or 4 years back. Varied answers. Someone used to mention something in the series A1, A2, A3. So it is out and open now that the series in India has begun from Ind AS 101. So IFRS 15 in India is known as now Ind AS 115.
115.
So you clearly know that in future, if there is any new accounting standard going to come up, will we wait for ICI or Ministry of Corporate Affairs in India to act on it? They publish it, then only we'll be studying it. Or we can pick the materials from ISB's website and we can begin preparation for implementation of it in India. Like in India, Ind AS 115 was issued on 28th March, I guess 28 March 2018, and was applicable for financial year 2018-19, just 3 days before. In similar manner, Ind AS 116 was introduced 1 month before, I guess in February sometime, February 2019, applicable for financial year 2019-20. So will we wait for them to act, or we will begin learning earlier? Because they want us to be prepared within a month or sometimes 3 days to implement it in the new financial year. So we rely on these guidance from the people who are smart, look beyond the borders, like you all have done. We take guidance from them, we be prepared, and the moment it is introduced, we get to know that there's no difference between IFRS 16 and AS 116. There is no difference. It's almost similar. In future, IFRS 17 is going to get applicable from 1st January 2023. It was May 2017, and one consultant called that, will I be able to deliver a training on IFRS 17? And I demanded a very heavy price for it. So she said that you are very costly. I said, no one in the country will agree to deliver a session on IFRS 17. I'm saying that I'll be able to do it. That's in itself an achievement. And you'll not find anyone in the country who will say that we will deliver a session on IFRS 17, that too in 2017, when it is going to get implemented in 2023. I've already delivered a session on the same in 2017, May 2017, to a Canadian insurance company. So since I knew that I can borrow this material from outside, it's already published by some of the big fours material around it. So it can be learned and can be done. But the simple awareness that until it gets implemented and until it gets declared by the Ministry of Corporate Affairs, will not be learning it or will not be using it, is lack of awareness. So I hope it is clear that if you learned IFRS, you are well versed in Ind AS as well, with some carve out, some differences. Is this question clear? So IFRS is the source.
Yes, sir. It's clear now. But I was asking something else. Let me ask in Hindi. मतलब पहले अकाउंटिंग स्टैंडर्ड था, तो वो पहले कैसे इसके साथ मैच हो रहा था नंबर वाइज?
पहले कैसे मैच हो रहा था मतलब?
जैसे सर आपने AS1 लिखा, AS2 लिखा, एंड द सीरीज कंटिन्यूड AS41 तक. ऐसे अकाउंट इंडिया में जब हम अकाउंटिंग स्टैंडर्ड्स पढ़ रहे थे, तो उसमें जो नंबरिंग में डिफरेंस था. So earlier India was not following that, or it has made their own accounting standards.
Shall I comment on it? Because it may be, I may not go in the right spirit. So I'll tell you around it as well.
Yes, sir, please.
So now when you are studying accounting in India, you definitely wish to believe in the body you're studying, isn't it? And you would also want to feel that you're very advanced, isn't it? That the sentence you made was that, were we in a situation that we had developed our own accounting standards ahead of the world, isn't it? And the world, and when the world woke up with the awareness of new accounting, it was exactly similar to what we had developed, isn't it? So how is this possible? Like, what do you think? So we have a standard like AS10. AS10 is the standard in India for
property, plant and equipment.
See, the name is the same, PPE. And we use the term revised also for it, right? Am I right?
Yes, sir.
In AS10, we talked about revaluation model. We also talked about excess depreciation transfer to retained earnings. We talked about new concepts of accounting, which was different from our previous standard on property, plant and equipment, right? Now, someone studying in India, do you think we developed it or we borrowed it from IAS 16 PP? Though I'm not aware what happened. I'm assuming that we developed it in India. We were so smart that we were ahead of time. We developed an accounting standard on AS10 PPE. And when the world introduced IS16 PPE, property, plant and equipment, it turned out that they also have the same accounting which we are doing in India. We are so ahead of time. And when finally we had to move to Ind AS 16, it turned out that we were already prepared for it because our AS10 was only similar. So there's nothing new in it. We are ahead of time. So someone learning PP in India feels confident that our body is so advanced that they had developed a standard known as AS10 ahead of the world. And when the world changed and when we thought to be in harmony with them, it turned out that I think they borrowed from us. Right? This is the gap India is facing, like, which I sometimes feel is not very good for the students who are pursuing CA. Because they are under an impression that they do not know accounting. But the reality is that they are already aware of most of the accounting which is being used internationally. But since they are so much involved into their day-to-day affairs that they don't even look to compare what is there in the new Ind AS 16 PP, which is different from AS10, and what is there in IAS 16 PP, simply because there are different words. We are learning IFRS, we are learning Ind AS. I'm doing the paper in the previous old syllabus, new syllabus. A lot of confusions. The fear that what if I move to new syllabus, will I be able to pass since I've studied, I've invested a lot of time into studying old syllabus. I'll not be moving to new syllabus. There were options given, but even then people did not move to the new syllabus, believing that they've studied old syllabus a lot and maybe they'll not be able to pass the new syllabus. What do you think after this insight? If anyone was in a situation similar to what I'm talking to. So we are not told outrightly. Someone has to dig deep what is happening at the back end, because this helps in maintaining the superiority that we were superior, isn't it? Which is good anyway for the profession, but somewhere deep down it is also damaging the confidence of the people like who are not aware of this. Right? Kanika, I cannot say this. Being an ACCA is the reason I'm very diplomatic in my approach. I cannot make any comments, and then I need to avoid or refrain from getting into any comparison because everyone is doing equally good work. Everyone is important in their own respect, and they are needed. Like, because since they exist, we got to talk about them. If they don't exist, like there would have been nothing to talk about them even. So everyone is important, like as far as they're contributing to the profession. This is good. But if this insight was known earlier, how many of you would have saved some years of your life? Simple thing refrains us from picking the book and see the difference, that there is a difference in AS or in AS 16. And it turns out that everything is same. Right? How many of you did not study IFRS or Ind AS simply because you believed that you will be giving paper in AS only? Anyone? Anyone? Yes, Kanika. Did you do the same thing? Many of you did not move to the syllabus change. Right? Mohit also did the same. And there is a fear inside that we don't even know what is there in Ind AS, IAS, that it may be too complex. But the moment you get to know this insight, I think your confidence is at another level of life, that most of it may be similar. Like I'll tell you another thing which happened. We were having an accounting standard known as IAS 14 operating segments. The AS in India, I don't know the number, but the AS in India was based on this. AS, if anyone know the number, you can tell me. The AS in India was based on
AS 17.
AS 17. So I'll just, since luckily I studied only IFRS in my life and everything changed in front of me, so I don't know the numbers of AS. And luckily, I don't have to remember that IS 1 is in AS 1, IS 2 is in AS 2. So my life got easier. Like I was just watching things changing in front of me, sitting behind. So AS 17 later on, IS 14 did their research and felt that SFAS 131 from US GAAP is better, and they changed to IFRS 8 operating segments. Luckily, by that time, we implemented Ind AS in India. So in Ind AS in India will be which standard?
108.
Ind AS 108 brings us back to normal. Now US GAAP, IFRS, Indian GAAP, all are using the same approach for operating segments. Make sense? So it's just a name in the outside world. I'm consulting on US GAAP nowadays. I had this notion that I don't know US GAAP. But when I entered into it and I consult on US GAAP queries, like which are tough for people, like they come to me and I give guidance on them, I realized that it is similar to IFRS. So accounting is almost similar. Just be confident. And in future, I know many of the people, like someone got a call from Singapore and they had appeared for CA final financial reporting paper based on Ind AS. Now this person, because of lack of awareness, they asked, do you know Singapore GAAP? This person said, no, I know only Indian GAAP, Indian version. But the reality was that Indian version was also IFRS and the Singapore GAAP is also IFRS. If the person had known about this reality and difference, he or she would have been in a better position to say that, yes, I am knowledgeable in US GAAP, I'm knowledgeable in Australian GAAP, Canadian GAAP, all the European countries almost are using IFRS today, UK GAAP, Singapore, Hong Kong, India, China, even Pakistan, everyone is using Bangladesh, Bhutan, Sri Lanka, Nepal is also moving to IFRS in July. Saudi Arabia is moved in 2018. We have moved. So almost all the countries in the world are using IFRS today. No, Swati, like that will confuse people writing on SBR, but definitely we'll talk about it if someday, if I'll have time, once we complete the syllabus. Okay. So there are differences, but minor differences. There are differences. The US GAAP is different from IFRS, but they're slowly and steadily moving to IFRS. Slowly and steadily. They also wish to maintain their supremacy, so they are not outrightly saying that we move to IFRS. They say that ISB and FASB work closely and develop an accounting standard. They don't say so that we are moving to IFRS. They say we are working closely and developed an accounting standard, which resulted into IFRS 15 revenue from contracts with customers. And US says that which resulted into development of ASC 606 revenue from contracts with customers, the same name. They worked jointly on leases accounting standard. They developed IFRS 16 leases, and US said that they developed ASC 842 leases. The previous accounting standard on leases was ASC 840, but now they are coming up with a new accounting standard known as ASC 842. So I'm sharing all this so that you gain confidence that you are in the right direction, whichever gap you're learning, and is choosing this paper as the first thing to do in ACC qualification will boost your confidence, because the essence of ACC is this paper. If you know this paper, people will regard you highly, and you can tell, because there may be people in the country like who may ask you questions like, so you are pursuing ACCA but you don't have diploma in IFRS. Tell them that you have done a paper which is higher version of diploma in IFRS. So you should be confident about your knowledge. So I've noticed like there were people who were told by some of their interviewers that since you don't have diploma in IFRS, you're not fit for our job. So until you retaliate and until you make or create awareness among among people. Like you need to tell them that this SBR paper is a little higher than the people who have done diploma in IFRS. So there are CAs who are doing diploma in IFRS, which is also a good thing. I tell them that if you just wish to showcase your skill of IFRS, you can just go for diploma in IFRS, add on one skill and your job is done. But if you want to move abroad, or you want to be preferred over others, you want to flaunt one more international degree as part of your CV, then ACC is a better option, because with just 4 papers, you reach that level. Clear? I hope your questions are clear, like which you were saying, though I think said more beyond what you asked even. Right?
Yes, sir.
See, my confidence comes from the fact that everything changed in front of me, and I was also confused. Like initially, will I be relevant in India? Will I get jobs in India? So everything happened and everything changed in front of me. So which gives me a lot of confidence, because I know what is happening, who is copying whom, who is driving it from whom. Everything is known today. It's clear, like what is happening. So when I look at a standard, I don't look at it in isolation. I'll open up all the gaps together. What is the difference between them, so that I'm confident that I know everything relating to them. And sometimes there's more clarity in another gap, like US gap sometimes gives more clarity on some of the facts, which may not be given in IFRS. ICI's Ind AS gives you more clarity with some more examples, some better examples. So everybody is working towards improving the profession. So we should not say that copied or pasted, but it's anyway helping. Like they must be adding on something, like to make it more clear. So it helps only anyway to the profession. Okay. So then there are 2 more words like IFRIC and SIC, IFRIC and SIC. Now the accounting standards which were issued till year 2000, there was a standards interpretation committee which was also working alongside to give clarity on any accounting standard which was not very clear. So they termed they termed SIC, Standards Interpretation Committee. Now interpretations required after the year 2000, when they coined a new word known as IFRS. They coined a new term known as IFRS after 2001. So any such interpretation issued after the year 2001 was known as IFRIC, International Financial Reporting Interpretation Committee. So I'll give you an example of what does that interpretation mean. Like there were accounting standards like IAS 11 construction contracts, IAS 18 revenue. There was a confusion among the construction industry that which standard is applicable to them, because they automatically believed that construction contracts is for them, and they were using IAS 11 as the accounting standard. But in reality, to some of the builders who were building flats and were selling them as sale of goods were supposed to implement IAS 18. This confusion was removed by issuing an interpretation known as IFRIC 15, Agreements for Construction Real Estate. So builder was selling a flat, was recognizing revenue on basis of percentage of completion, but actually they were supposed to recognize revenue after 4 years when they hand over the possession of the flat after 4 years, because they were actually selling a good. They were selling an inventory. But this confusion was eliminated by issuing an interpretation known as IFRIC 15, Agreements for Construction Real Estate, which said that if buyer has control over design and specification when you're entering into the contract, it will be IAS 11 construction contracts. Otherwise, it will be considered sale of goods. So that's how the interpretation committee worked on clearing the air on some of the issues which were not very clear. So the interpretation committee which issued this before year 2000 was known as SIC. The interpretation committee which issued it after year 2000 was known as IFRIC. Today it is known as IFRS Interpretation Committee. So that's how it was known. SICs were known as SIC 1, 2, 3. Now, as of today, there are only 5 SICs left which are relevant and applicable, and there are only 18 IFRICs left. 18 IFRICs and 5 SICs which are relevant and applicable today. There are around 24 ISs. There are around 24 ISs which are relevant and applicable today. Out of the series till 41, there are 16 IFRS. There are 5 SICs. There are 18 IFRICs which are relevant and applicable today. And all these are considered IFRSs of today. When I say I'm using IFRS, I may be using an interpretation, I may be using IAS, I may be using IFRS, SIC, IFRIC, anything I use regarding preparation of financial statements, I'm using IFRS as of today. Clear? So this insight I shared that IFRS 15 is similar to ASC 606 of US GAAP. In India, it is known as India AS 115, and the name in all the three gaps is known as revenue from contracts with customers. So if you know revenue accounting for IFRS 15, you're also very well versed in US GAAP and India AS accounting for revenue everywhere in the world. So this is the time when it got triggered, it got relevance in India or the world. In 2005, European Union decided that they'll be preparing financial statements based on IFRS. In 2007, Australia, New Zealand, South Africa decided. This was the year I got to know about ACCA, and I had no idea that I'm doing something which is going to change my life tomorrow. I had no idea about it. I just did it because I had nothing to do. Like I had no options in life. So is the reason I pursued ACCA. In 2008, in G20 summit, India was also signatory that we'll be moving to IFRS in 2011. And I included 2009 because this was the year I got a job to train people on IFRS. Since I studied IFRS into my curriculum in 2008, I did my FR paper in 2008 based on IFRS, but I had no idea that this is something known as IFRS. For me, it was an accounting paper. It's my employer who told me that you have knowledge of IFRS. And the person who interviewed me in 2009, the director who interviewed me in 2009, his daughter is studying ACCA with me from this year because she's cleared her 12th this year in 2021, and she is pursuing ACCA with me after 12 years of connected with each other, though we did not work together later on in life. But he believes that, and that dialogue of that Hira Kanchuparakada, I said to him only, and his daughter is studying with me today. Okay, so that's the respect earned over the 10 years, the hard work done, or not say hard work, like the work I enjoyed in the last 10 years resulted into proving that ACCA is worth it. Like we have proved it, that it is worth it, and we'll be able to drive anyone to become ACCA tomorrow. So, and I accepted it as a blessing, that thank God, it's a blessing. We were supposed to move to IFRS in 2011. So I hope you got confidence now that the person who interviewed me for my first job on IFRS, he's a chartered accountant. His daughter is moving from science to do ACCA with me after 13 years. So do you feel that this has reached a level in India now? This has moved to, ACCA has moved to the next level of recognition and acceptance in India. Can I say so? So I hope before we started, like some of you had doubts about it. Are you in the right direction? Is this the paper to be done? I hope all your doubts and confusions are clear and you're confident than you were before, right? So we started training on IFRS in 2009 and our team was picked up by KPMG in 2011. But I didn't go with the team.
Sir, I have one question. So once you said that you've been employed in 2009 after doing because you were part of ACCA and you just cleared your IFRS F7 paper. So I was kind of, you were still a student. So you mean that till that time you were kind of well versed enough to actually implement those IFRS in an organization. So do we have such kind of exposure into ACCA by doing an F7 paper?
So Mohit, I didn't even had any idea that, and I'll tell you, when I was supposed to appear for this paper, like when I joined after BCom, I decided to write 3 papers that time. And we used to give papers after 6 months. And imagine the student mentality is to simply pass the qualification and not to be knowledgeable, right?
Yeah. Yes.
I started gaining knowledge after I entered the job and I realized that this is something big and I need to work hard. And there were bare text around us, the people around us, the chartered accountants. There was 3 ACCAs flying directly from UK who were employed along with me. They all were UK returned and I was Kerala returned.
Okay.
They had spent around 30 lakhs for the same degree. I had spent around 5 to 7 lakhs at that point of time. They were all qualified ACCAs. I was part qualified ACCA. I joined ACCA 2 years after my BCom. So looking at them, I felt superior. Looking at them, I felt that I'm in the right boat. And while I was pursuing ACCA, I was just hitting in the dark.
Right.
That something will happen in my life because of this degree. And I had no idea that this is something big, like which I'm pursuing. I did not get to know about it until I got into a job. And even while doing the job, I was 4 papers away and I was confused like you, whether I'm in the right direction, whether Big Four will give me a job. All these questions were bothering me as well. Will I be, and when I used to search on Google IFRS, it used to say 0 result. ACCA 0 result.
Okay. So yes, I was kind of want to know your psyche, like, you know, after studying so much, and you were just BCom pass, and at that time, and you're partly qualified ACCA, and by just giving an F7 paper, you got an opportunity to train people and implement in IFRS. So that is something which is big. So I want to know, like, does ACCA studies give that much of exposure so that you can implement it?
So Mohit, I'll tell you, like, so when I was offered this job, I had no idea what they've hired me for. So then I got to know that they wanted me to prepare presentations to IFRS. So we had this liberty of spending 10 days on one presentation on IFRS or 7 days on one presentation on IFRS. I actually started studying after I got into a job because I had no choice then. Okay. And when I was supposed to give my FR paper, like that time, we used to appear for papers 6 months in a gap of 6 months. We used to have papers only in June and December. So we used to give 3 papers in one attempt. And there were no objective type scenarios. And it used to be like 5 lengthy case study questions. It used to be like that. So I did not appear for my FR paper first time because I was afraid that I may fail. And I had never failed in my life. So in that fear, I did not appear. My teacher was angry at me that why didn't I appear? I would have easily passed. So next time I appeared for it and I passed the paper. So first time I wrote 3 papers, 2 passed, 1 absent. And the same subject I'm teaching to the world today, like and I got a break in this subject only. After I got into the job, I realized that the golden period of studying I missed. That when I was actually supposed to study, I did not study. I was hoping to simply pass. And when I'm actually in the job, I need to study like hell. So I used to study till 3 a.m. in the morning, till 4 a.m. in the morning. I used to be present at my job at 8 a.m. in the morning. So the actual hard work, which people call, or actual work I started doing was after I got into job. Our team was picked up by KPMG in 2011. I did not go with the team because I felt that the company who has given me this opportunity initially, I should first clear the things with them and then only I should leave. So I worked 7 days a week. There used to be times, so I was giving training with the likes of Dr. D.S. Rawat, like Vinayak Pai, there's Yogesh in Mumbai. So these senior people like Ravikant Meriala, I was heading the academics team then, and I was offering them lectures. I used to give lectures along with them. So when I used to come, like definitely people had this fear that D.S. Rawat is coming in and then Vinayak Pai or someone else coming in and then me coming in with black hair. I didn't have the specs as well. So I borrowed the specs, like when I had got this number 0.25 to prove that with the specs, I look older and I'm knowledgeable. So I used to study, and there used to be times when someone used to call in the morning at 7 a.m. Amit, my wife is not well and I'm not going to be present at the session. And there are 70 chartered accountants waiting for some trainer to come. I ensured that if no one comes, I'll be there. I prepared myself in a manner that if people say no, I'll say yes. So I think which made a lot of changes in me as a personality and which changed my perspective of looking at life. That I'll not be looking for easy things in life. I'll be looking for the tougher things in life. So whenever I'm given a choice between 2 choices, I always take the tougher path. Like our team was picked up by KPMG. One of the very senior CPA told me that you are mad, you're not going with KPMG. So I said one thing that point of time, that if KPMG needs me tomorrow, I have heard that this is a big company. If they will need me tomorrow, I'll join them tomorrow, but this company needs me today. So I'll be staying back and first clear the things here then only I'll be leaving. Then I started the first ACCA Institute in Delhi. I was competing KPMG. And I said no to them initially 7-8 times, and then I joined. So it was the attitude going against the tide, which also helped me a lot into building my career in a short span of time. So it was always choosing the tougher path, always doing what people don't do, always not going with that herd mentality. I was always refraining from going with the herd mentality. So I think which was also one of the reasons for choosing ACCA, because everyone was pursuing CA, MBA, civil services. I thought to do something different. So that decision actually helped. And this is the thing I share with the youngsters, that it's a golden period to study. Please don't waste it. Because once you get into job, then it becomes really tough to manage your job as well as study. Like I cleared my one paper after my marriage, and my last 4 papers I cleared like after joining the job. A similar situation. And imagine you are better than me because you have also done, some of you have also done CA, some of you have already struggled with your CA papers. In comparison to you, I was nowhere closer to who you are today, isn't it? You're better off than me, far better than me. I didn't even know like how an Excel looked like or how a PPT looked like. So imagine my state that point of time. But luckily or unluckily, if I would have said no to that job in India, there was no job for me in India in 2009. It was peak recession time. People were being kicked out, and someone was offering me a job. And that too, I joined with attitude, like believing that I've done something big. But that's another story. Like, so it all depends on how you think, how you wish to navigate through your life. So one regret I had was that I should have studied better and more while I was given the opportunity to study. But later on, it became tough because I was waking up till 3 a.m., 4 a.m. Like imagine, now you ask this question that how can a part qualified ACCA stand in front of CAs? I also had this feeling that I could not sleep till 3 a.m. in that morning. And there was a sudden shift in my life. Like I boarded the flight for the first time, stayed in a 5-star for the first time, then in a big hall, you're standing in front of chartered accountants. So it was a different feeling. Even the CFO of the company was sitting in front of me as part of the audience. So could not sleep till 3 a.m. believing that chartered accountants to meri dhajiya ukhed dengi, kal kya hoga. So I also had this fear. But by evening that day, one old man, like some old chartered accountant, came to me and he said that you have reminded us of school days. So I just looked up and I just believed that God just wishes me to just continue and I should run now. So thereafter I ran like anything. Like I didn't look back. I always felt superior. And the superiority came from the fact that if CAs are sitting in front of me, or if the corporate world is sitting in front of me, that means I've got something superior and I should simply believe in myself. So I never allowed people to make me believe that I'm not a CA. How can I teach? I always believed that, yes, I am the best version of myself and I can do it. And I proved it with knowledge. So whenever there was criticism, whenever there was doubts about my ability, I started working harder than I used to, instead of fighting with people that I'm the best. So I started investing time in myself. I started studying more whenever there were doubts about my ability, not being a CA and teaching this stuff. And that too, along with the stalwarts in the industry. Okay. So it was all based on the attitude, I would say. And where, like, I did not join KPMG, but I joined on their request later on. And the moment I joined KPMG, I got promoted within 1 year. And there were people like who were not promoted from 5 years, 4 years, 3 years. I was the one who got promoted within 1 year. And that year, again, our team was picked up by EY. So the 3 or 4 people who we all started in 2009 are sitting in all the leading companies today. The one with us in 2009 is the director in EY Academy on IFRS. One with us is the director in Grant Thornton. I was director in BDO. There's one who stayed with KPMG is heading the learning services at KPMG. So the initial people like who were part of that company in 2009 are actually the directors of learning academies in all the big four today. That's what came up, like kind of a startup thing which came up from 2009, and we all were leading in all the big fours as part of learning academies based on IFRS. And I was the youngest one in this team, but I am 4 years ahead of all my team members today, because I've disrupted my life in the last 10 years. They had jobs, like moved with the tide. I moved against the tides, left my job 3 times. So it all depends on they all were ACCAs, but it all depends on how you view your life, determines your way of living life, not the degrees. Degrees are a mechanism to help you get into a job. Then how you take up things, how you become knowledgeable. So ultimately, knowledge is supreme. Like that's what I learned. Your knowledge is highly regarded. If you're knowledgeable, if you're confident, and knowledge gives you confidence. If you're knowledgeable, if you're confident, then people will respect you and they're bound to respect you. There's no choice left thereafter. So the only thing you can do for yourself is invest time into yourself as much as you can. Don't be afraid of repeating the content. There are people who say, I've read something, why should I repeat? Repetition gives more clarity to your content. I've been repeating the same stuff since 10 years now. And every time I read it and every session I behave, like even sitting in front of you, whenever I'll start a new session, I'll believe this is the beginning of my life. This is a fresh thing. So I play the guitar as if I'm doing it for the first time. So that's the attitude I've maintained, that I'll not behave as if, since I know this stuff for many years, so I should just do it casually. I do it with passion. I do it with energy, believing that you don't know is the reason I said I'll treat you as a layman. When I started off, you must have noticed that I'll treat you like laymen. You may be knowing it or not, but I'll treat you as if you don't know. So I go to the very basic level of things, treating every session as a fresh start in my life, which has maintained my level of energy and passion in all these years, and which brings energy to my sessions. And definitely this reputation has given a lot of clarity to the content I share. So which also benefits and which gives you, like in the last 10 years, I've noticed 90% of the people don't study. 10% people who are studying, who are still in touch with me, are leading the big positions in the country today, are one of the leaders in the industry today. Those are the 10% people who are keen to learn. So one thing which will define your career or will place you different from the people will be keep on reading, keep on building knowledge. Don't worry about designations. Don't worry about increments in salary. Don't worry about the work you're doing. Keep on learning, keep on building knowledge. If you keep on building knowledge, crystallizing your knowledge, refining your knowledge, that's one thing which is going to place you above all in finally in the end. But if you keep on cribbing, keep on doubting, keep on thinking that I'm in the wrong job, jobs don't determine you. Your knowledge determines your job. In my case, like all the jobs were created, there were no jobs for me in India. The first job was created, then again, department got created in KPMG. There was no department learning solutions in KPMG. Department got created. In EY, department got created. In BDO, the department got created. In TMF, the job was created specially for me. And even recently, a job is being created for me. Like, as I said, I'm giving guidance on US GAAP. Now, this is moving me towards another level of life. Like, I may also opt for US CPA tomorrow. So that, which brings the circle complete, because I'm keen to learn and I'm being asked on US GAAP queries now. So I wish to complete the cycle. So I may also opt for US CPA. And the Becker is ready to give me heavy discounts to bring me in as part of it. To bring me as part of the CPA story as well. They are willing, or they are also keen to bring me in CPA as well, because they know that is something which I can easily do or easily pursue. Thanks, Kanika. Like, I shared it to help you believe that you are better off than me. So the only message I wish to give is, whosoever is attending this session is far better than me. If I can create it from the level I was in, like imagine a BCom, like Mohit, you could understand my situation. Like a BCom graduate who don't even know, has never worked in life and joined as a fresher, and that was standing in front of CAs who train them. Like imagine the courage needed or collected at that point of time. I could have simply ran away, isn't it?
Yes, absolutely, sir.
But once you do it, you are able to reach the next version of life. Okay, so this was initial introduction to IFRS. Let's take a 5-minute break and then I'll discuss about IAS 1. Or I'll continue with the session. I think we should continue and then we'll wind up at around 9:30. Shall I continue? I hope.
Yes, sir.
Because
Continuing is better, yeah.
Okay. So it's still 10, it's still 9:30, so it's better. So my first session goes like this only because I spend time, invest time to build the faith. Because once you believe in the teacher, then your journey becomes easier. Otherwise, you'll waste time. Another 2-3 weeks will be just to test me, or test my knowledge. But on day one, you clearly know that who you are with, isn't it? And you don't need to doubt me because the person who has, as a part qualified ACC, have taught chartered accountants. So I think I'm in a better position having spent 10 years in industry or more than 10 years in industry, right? So I believe that I'm the best as far as Ifrs is concerned in India as of today. And all my dialogues, like, which I believed for myself. I have some favorite quotes for myself. Winning begins at the beginning. We are what we think, our thoughts make our life. I recently, when I came up to start this new journey of life, I said the goal isn't to live forever. The goal is to create something that will. And whether we remain or not, but the impact we leave on society through our work and through our diligence, like that remains forever. Someone getting improved because of us, someone doing better in their jobs or their lives because of us, is the real impact, like, which we should leave on as a legacy. Not so, though some people consider that earning money is bad. Earning money is not bad. We need money to drive our life, to drive through our life. If someone says that, why are you running after money? We don't run after money. Like, we need money to live our life. We have no choice, actually. I wrote an article around it as well, that we don't have choice. We have to earn money to live a good life. So there is no choice. If someone says that, why are you running after money? Why don't live a contented life? Simply say no to them, that I don't want to live a contented life. I want to live a good life, and a good life requires some investment, some expenditure in the form of money. And if I would have been an animal, I could have gone to any river and would have drank water from any river without anyone demanding dollars or rupees from me. But since I'm a human being, like, wherever I go, and if I demand even a bottle of water, like, someone will ask me the money. So I don't have a choice, like, being a human being, that without money, I cannot even drive my life, isn't it? So that's one important thing, and which can only happen through the skills we gain through business, through skill, through jobs. We have used some mechanisms to earn that money, and whatever makes us feel good is a better way of earning that money required to live a good life. So don't get bogged down with these words like, why live a simple life and all. We are not here to live a simple life. We are here to live a good life, and that requires earning also as part of the aspect. The difference between IFRS and Ind AS, or adoption and convergence, like, what is the change which has brought into AS? So IAS 1 is the first standard, which is presentation of financial statements. So in IFRS, there is choice, like two statement approach. We can present profit and loss separately. We can present other comprehensive income separately. Other comprehensive income is unrealized gains and losses. P&L is realized gains and losses. So they also give a choice there as well, that if you wish to present, you can present in function of expense or nature of expense method. So function of expense method or nature of expense method, there is a difference, that if you, nature of expense means depreciation, stationary expense, all these are nature of expenses, but we can call them directly as part of, we can directly say that the function of expense is administration expense. So they say that if you want to present administration of expense as a way of presentation, you need to disclose the nature of expense. What we would do in India? What do you think? If we are given a choice in India, that if you give function of expense method like administration expense, you need to disclose the nature of expense. What we would do? Will we keep this choice, or will eliminate one of it?
Simply give nature of expense.
So we don't want to bother ourselves. We simply say that, why to bother ourselves, that when we'll have to first decide nature of expense and then disclose in the nature of expense later on in the disclosures, is better. I'll have only one approach in India. So in India, we have only one approach: single statement and nature of expense. IFRS gives two choices, two statement approach. In India, we have only one single statement Just nature of expense. That's it. In similar manner, there was a standard known as IS 40 investment properties, which required a choice between cost model or fair value model. In India,
can you give an example? What do you mean by function and nature? What exactly you meant by it?
Function was that like we show our rent depreciation is the nature of expense. So in your income statement, you show it under the head administration expense. That becomes the function of expense.
Okay, fine.
Then in India, when was the first valuation exam held?
Something
The valuers,
2018.
The valuers in India, like when was the first valuation
2018.
exam? Yes.
2018.
2018 was the first valuation exam. I think 2019 was the first certificate was given on to a valuer in India who did a valuation exam in India. And we were implementing this IFRS in 2015, 16, 17. But since there are no valuers in India, but IS 40 investment properties require fair value model to value our property, plant and equipment, to value our land and building. This is a standard especially for land and building. So what we did, we said that we in India have only one model for India's 40 cost model. We don't have fair value model, but it required a fair value as a disclosure. So I sometimes say that I think it is a way to prepare the workforce to be in a position to value. We are simply disclosing it. We are not bringing it onto the balance sheet or financial statements. So in future, whenever we are ready or prepared, I think we'll come up with a circular or a notice that India's 40 also now has two models, cost model or fair value model. This is bound to come in future. You can write it down. And this is going to happen in future. Today we have only one model in India's 40, but in future there will be. So wherever we differ with IFRS, that is known as carve out. Wherever we are in similarity, we call it carve in. Like IS 16 is similar to India's 16 cost model, revaluation model. And India will be mandatorily moving to India's was supposed to move to India's from financial year beginning 1st April 16. So when I say we are moving from financial year 1st April 16, like what is the date or first India's balance sheet published in India, which is the first India's. So these words were also important to be read. Applicable for the financial year beginning 1st April 16. So the financial year ends on 31st March 17.
Yes.
So the first balance sheet to be prepared on India's, which was published for these entities, which were worth more than 500 crores, then worth more than 250 crores. Today, all the listed entities in India have moved to India's. So the first India's compliant balance sheet was supposed to be of 31st March 17. Now IS when or India's one presentation of financial statement says that we need to give comparative also based on India's or IFRS. So 31st March 17 is on IFRS. 31st March 16 is also supposed to be an IFRS comparative. Now, which balance sheet will pick up to convert? Now, to be able to publish financial statements based on IFRS for first time, now I've taken in India as example here, though. So this knowledge is not needed for your SBR syllabus, but this is needed for understanding the psychology behind IFRS. What has changed? I think these are some of the interview questions as well, which are important and necessary for believing into the subject. Because once you have this faith that this is an important subject to be learned and you need to build around it, then it becomes more easier for you to navigate through the qualification. Otherwise you treat it as a burden. Now this becomes interesting, isn't it? That this is something which is in not only in India but globally. So the first balance sheet, which is supposed to be based on IFRS, will be publishing comparative also based on IFRS, and which balance sheet will be using to convert will be. So there is a requirement that whenever there is a change in the accounting policy, whenever we are applying the gap for the first time, when we are changing IFRS for first time, there is a third balance sheet to be published of the beginning of the earliest period presented. Now the current period is beginning from 1st April 16 to 17. Comparative is beginning from 1st April 15 to 16. The beginning of the earliest period among the two periods, the beginning is 1st April 15. We need to publish one more additional balance sheet when we apply IFRS. This is the third balance sheet published when we are applying IFRS for first time. beginning of the earliest period presented. So we pick up the balance sheet of 31st March 15, which is based on previous gap or AS, previous gap balance sheet. We apply IFRS 1 first time adoption of IFRS onto this balance sheet of 31st March 15, and we get 1st April 15 balance sheet, which is based on IFRS. The first converted balance sheet, this is also known as date of transition. Date of transition is 1st April 15. So when someone asks what is the date of transition in India, mandatory date of transition in India was 1st April 15. The first IND-AS complied or IFRS complied balance sheet in India was of 31st March 17. Comparative was of 31st March 16, and it was applicable for financial year beginning 1st April 16. Mandatory application was 1st April. Yes, Palak, it is retrospective, but we are given this IFRS 1 first time adoption of IFRS, which gives us mandatory exemption and optional exemptions features to be able to move to IFRS. As far as income statement was concerned, only current and comparative was presented. So IAS 1 requires that we give current year balance sheet and we also give comparative of the same using same accounting policies. This is a requirement. But when we change an accounting policy for the first time, we apply IFRS for first time, we need to present with the current and comparative, we need to present the third balance sheet as well. That's a requirement. Third balance sheet. Whenever there is a change in accounting policy, whenever there is a correction of a prior period error, whenever we apply IFRS for first time, we publish third balance sheet as well, which is actually the converted balance sheet or the changed balance sheet. So whenever there is a change in accounting policy, correction of a prior period error, we need to apply the effect retrospectively. Retrospectively means as if we have been using the same accounting policy since beginning. So we publish an additional balance sheet of the beginning of the earliest period presented. Like 31st March 15 was chosen as the balance sheet for conversion. We apply the effect retrospectively on it. Retrospective means like we apply on the PP item of 31st March 15, we will apply IFRS 1 and we'll convert it. Inventories value will bring in at par with IFRS, financial assets, long-term borrowing. On all, we'll apply IFRS 1 first time adoption of IFRS, and we'll have the converted balance sheet of 1st April 15. This 31st March previous gap balance sheet, when we apply IFRS 1, this becomes 1st April 15 balance sheet, that is converted balance sheet, and this 1st April becomes the date of transition. So we use IFRS 1 first time adoption of IFRS, we apply mandatory exemptions like estimates are always applied prospectively. Any derecognized financial instruments, we do not need to go back to value them. NCI's valuation, we do not need to go back. Optional exemptions like if we have a PP valued at 5 lakh in the previous gap, we can carry it forward as at deemed cost at 5 lakh in the new IFRS as well. These are the optional exemptions given under IFRS 1. Foreign currency translation reserve, we can reset it to 0. We are given a choice. Since it is unrealized gain on first time adoption, we can reset it to 0. That's the choice given to us. So for the year beginning 1st April 16, we decide to change the accounting policy. Like this is similar to changing gap for the first time, changing the accounting policy for the first time, or correcting a prior period error. Suppose we decide for the year beginning 1st April 16, we decide to change the accounting policy to move to weighted average. So till now we have been using FIFO in all these years since 2011. Suppose we incorporated in 2011 and we have been using FIFO since then. We are on 31st March 15. On 1st April 2016 onwards, we decide to move to weighted average. So on 31st March 15, we'll see what is the value under FIFO, what should have been the value under weighted average. So to be able to bring this change, if we are supposed to move to this new change from 1st April 16, we'll be bringing in this change on 31st March 17 for first time. On 31st March 17, balance sheet will witness weighted average valuation of inventories for first time. So 31st March 17 will bring in 6,600. 31st March 16 will bring in 8,500. But on 31st March 15, the valuation was 6,500. So we apply the effect retrospectively as if we have been using weighted average since beginning. So if we would have been using weighted average since beginning, the valuation of inventory should have been 7,800 if we would have been using weighted average since beginning. But since we were using FIFO since beginning, the value is 6,500. So we assume as if we have been using weighted average since beginning, the value of inventories on 31st March 15 should have been 7,800. So we bring in this change that on 31st March 15, it was on FIFO. We publish an additional balance sheet of 1st April 15, and we change it to weighted average and include the inventories at 7,800. This helps in bringing the change from FIFO to weighted average. We have been successful in applying the effect retrospectively. We have been successful in changing the accounting policy. The same concept is being used to change the gap from the previous gap to IFRS. We apply IFRS 1 on 31st March 15 balance sheet. After application of IFRS 1 on 31st March 15 balance sheet, we have converted balance sheet of 1st April 15. In similar manner, the balance sheet of 31st March 15 included inventories under FIFO method, but 1st April 15 balance sheet include inventories under weighted average method. That's how the effect is applied retrospectively, and any difference is taken against retained earnings. The same thing we do when we change the gap. Any difference is taken against retained earnings. So in these three instances, we need to publish an additional balance sheet along with current and previous year. These three instances are whenever we change the gap, whenever we change an accounting policy, which is guided by IAS 8 accounting policies, and whenever we correct a prior period error, we need to publish the third balance sheet. Suppose there is a error which is discovered, and we get to know that with error, the amount in PP is 78,000, and without error, it should have been 69,000. We apply the effect retrospectively. We say that without error, the value should have been on 31st March 27, it should have been 86,000. 31st March 26, it should have been 71,000. And on 1st April 25, it should have been 69,000 without error. On 31st March on 25, the value should have been 69,000. So in the 1st April balance sheet, we carry forward this without error value, and 31st March with error, it was 78,000. So by publishing this additional balance sheet, we have been successful in eliminating the error and applying the effect retrospectively. For an error, applying the effect retrospectively means assuming as if the error never occurred. Okay, so now, if you want me to repeat anything, I can go back.
No, sir. Sir, the below part that you were discussing right now.
Okay.
Please repeat that.
If I repeat again, whenever we are required to change the gap, whenever we are required to change an accounting policy, whenever we are required to correct an error, the expectation of IFRS is that we need to bring in the change, applying the effect retrospectively. Now, this requirement of applying the effect retrospectively was one of the reasons countries and accountancy bodies were not willing to move to IFRS. Now, to counteract this, what they did, they published a new standard known as IFRS 1, first time adoption of IFRS. They said that we'll publish a new standard which will help in giving some relaxation on applying the effect retrospectively. And what was the relaxation expected? That will not apply the effect retrospectively as if we have been using the same accounting policy since beginning. Because if we apply the effect retrospectively while changing the gap, we'll be in trouble. So the relaxation was given through publishing IFRS 1, first time adoption of IFRS. Yes, Swati.
Sir, I wanted to ask, any difference between the previous gap and IFRS is taken against retained earnings. Is it true for like Ind AS also?
Yes, obviously.
Okay.
When we are implementing Ind AS for first time,
yeah,
in the 31st March balance sheet, like here.
Yes, sir.
We changed the 31st March balance sheet and we converted it to Ind AS. Okay. So after conversion, we get 1st April balance sheet. So whenever you are reading any balance sheet, if you see 3 columns of balance sheet, 3 columns, like 2 columns are there in every balance sheet, current and comparative. But if you by chance see the 3rd column, that 3rd column will be the beginning of the earliest period presented. So the 3rd column, 1st April, like in India, if you see 1st April balance sheet, in US, if you see 1st January balance sheet, or in any country where the calendar year for their financial begins from January to December, if they see 1st January balance sheet, in India, if you see 1st April balance sheet, it means that The first April balance sheet signifies that either we have changed an accounting policy, either we have corrected a prior period error, or either we are changing the gap in full. This is what this third additional balance sheet signifies, right? Now, whenever we change an accounting policy, we are expecting that we have to apply the effect retrospectively. That's why IFRS 1 came into being. They gave us some mandatory exemptions and optional exemptions from what? These mandatory exemptions and optional exemptions from applying the effect retrospectively. We are given relaxation that please don't bother yourself, carry forward the same value of PP as deemed cost and record it. You do not need to recalculate it going back. So we availed for optional exemption. We were given some mandatory exemptions in some cases, like estimates are always supposed to be applied prospectively anyway. IAS 8 accounting policies, change in accounting estimates and errors said that change in accounting policy, correcting a prior period error, we need to apply the effect retrospectively. But estimates are anyway, even in our current gap, are supposed to be applied prospectively. So this was a common sense thing as well. But even then, they ensured to include it as part of their content that estimates are applied prospectively, and this is a mandatory exemption. Please do not apply the effect retrospectively to revision of estimates. Though this was obvious, like the estimates are never applied retrospectively, right? Now, one question now. Change in method of depreciation is a change in accounting policy or change in estimate?
The policy.
Estimate.
Estimate.
Change in method of depreciation is a change in estimate or change in accounting policy?
Change in
accounting policy.
So if you were in
Policy.
India before
Change in accounting policy.
So whosoever is giving the answer is right in their own way. If we are in India before the implementation of Ind AS, we used to consider change in method of depreciation as a change in accounting policy because we defined the measurement basis. But after the implementation of Ind AS, any change in method of depreciation will be considered change in accounting estimate. Clear?
Yes.
Before implementation of Ind AS, it was policy. After implementation of Ind AS, it is considered as an estimate, change in estimate. Right. I hope it is clear now. I hope when I say these three sentences, in these three instances, we need to publish an additional balance sheet along with current year and previous year balance sheet. So is the reason changing the gap requires IFRS 1 because we need some relaxation. But in future, if there is any change in accounting policy or if there is any correction of a prior period error, then we don't have IFRS 1. IFRS 1 is used by an entity only once in their lifetime. Once it is used, it is of no use to them. Got it? An entity can use IFRS 1 only once in their lifetime. Thereafter, they cannot use it. Change in accounting policy, if anything happens in future, any error need to be corrected, then we need to refer to IAS 8 in future. And when we refer to IAS 8 in future, suppose is the reason I've taken purposely 2025, that in future, if there is any error which you discover, how will you change the error? We believe as if the error never occurred. We apply the effect retrospectively. So we go back to correct the error in a manner as if the error never occurred. So with error figures included in our balance sheet already published are 78,000. Without error, they should have been 69,000. So we apply the effect retrospectively and we say that with error, it was 78,000. Without error, it should be 69,000. So we publish an additional balance sheet simply to correct this. And any difference is adjusted against retained earnings. So now the standard applicable will be IAS 8, apply the effect retrospectively as far as it is practicable to do so. So IAS 8 has also given a relaxation that if you cannot go back since incorporation since beginning, go back as far as it is practicable to do so. They have also given some relaxation on retrospective application. Yes, there is the logic. The logic is, Karishma, if I ask you that you bought a machine and you expect to use it equally over all the years. You expect to use it. Which method do we think we should use?
Straight line.
But after some point of time, we got to know that we've used it more in the initial year and it will be used less in the later years. Which method was more appropriate? Which one?
WDV written down well.
So I hope your question has got the answer.
Okay.
That is there any logic behind the change of method as an estimate? So isn't it an estimate when we decide the pattern of consumption of an asset? We are estimating the pattern of consumption, right? And
Amit, sorry to interrupt. I just had a question. To me personally, it feels a little prolonged to see everything from India's perspective as well as IFRS. For instance, when you asked the depreciation change, like for instance, I said it's change in policy, which was incorrect in terms of IFRS. For me, it feels like for a 2-month course, it will be too much to remember the differences between India's IFRS. So I feel it would be just better if we just focus on IFRS. It's just my perspective, and
yeah, I'll not be Puneet. I'll not be talking about Indias in my future classes. Okay. The first class is just to build your confidence. Okay.
Thanks.
Even if I don't do this session, the job is done. Okay.
Right.
But are you better off after this session than not doing this session? Right. If I directly pass on to and behave like a teacher, just required to do SBR syllabus and just directly jump onto PP and all that stuff relating to IFRS, will it be better off, or you'll be better off in terms of confidence after I share insights around it?
Yeah, insights is better, I feel personally, but however, comparing everything to India's will lead to more confusion. And,
I'm not comparing.
Yeah.
I'm not comparing everything. If you noticed.
Yeah,
I'm just sharing the difference between applying the effect retrospectively, because this is related to IFRS. So I'm sharing the stuff which is related to IFRS, but the context I've used Indias just to build your confidence. I can outrightly remove these words Indias from here. So if you notice, I did not use the word IFRS or Indias. I said with error, without error. Okay, IFRS 1, IAS 8. I have not referred Indias here. I referred Indias from the context of India because you could have understood it better since we implemented Indias in India in this year. So for someone like who is in India and wishes to understand like how it got implemented in India, for them I had taken the dates of India just for the sake of clarity. I could have taken some random number as well, like 2027, 2052. But since we are in India, we know that it got implemented from 1st April 16. So I thought to relate it to our scenario. That's what I've done. And I can outrightly remove these words. Like I use the word IFRS, just use this Indias, I can remove it altogether. It doesn't make any sense. Because anyway, I'll have to tell you why IFRS 1 is needed. Right? Why IAS 8 in itself is not enough. Why it is being used only once. What is the purpose? Why 3 balance sheets? These questions are part of IFRS. Okay. These are insights I'm sharing. Right. This I could have avoided, but even if you get to know more, I think it will not bother you. I don't want you to remember all this. Right. This is just for information. So you can consider it like this. If I've shared this, means this builds confidence that we are in the right direction. Even if we learn SBR syllabus, if we learn IFRS through SBR, we're actually learning IFRS. So you're not learning SBR, you're learning IFRS through the syllabus of SBR. Okay, which is anyway going to benefit us not only in this paper, but in your everyday day-to-day life as well. Right. So that's why I said, like, for some of you, it will need your patience because I may not be able to cater to everyone, but this is expected. The ones like who joined directly after CA final, they definitely need this boost in the first session. Okay. Hope this is clear. The difference between IFRS 1 and IAS 8. And in these three instances, we need to publish that additional balance sheet. So there's a lot of confusion around transition. So big words like transition, implementation, convergence. So I've cleared the air around all of them. And I'm very confident that this has helped some of them in building confidence that this was not as complex as they thought, like in terms of conversion. So whenever there is a change in estimate, we'll be applying the effect prospectively. Means we'll not be going back and making the change, we'll be making the change in current year and future years. So through this, I'm also catering to IAS 1 and IAS 8. So I'll not have to refer to IAS 1 and 8 because I've already done it with you. That's what IAS 8 accounting policies, changes in accounting estimates and errors do. So I've already shared the standard with you through my discussion. IAS 1, I've shared the presentation. So IAS 1 presentation of financial statements will require us to present these statements. Statement of balance sheet. This is known as statement of financial position. Statement of P&L and other comprehensive income. Statement of changes in equity. Statement of cash flows and notes to accounts. So we use a framework here that is known as conceptual framework, which defines all these elements: asset, liability, equity, income, and expense. Asset. See, my way of presentation is such that I'll be covering many standards in my discussion. So I'll not be going through that PPT model that IAS 1, IAS 2, IAS 7. So I'll be sharing some presentations as well with you. But I share IFRS in terms of understanding purpose, how our mind will understand better. So when I do asset standards, I do all in one go together. I relate them together. Okay, so this saves time, this gives more clarity. Like if I'll be doing the asset standards with discussion, when I'll be doing, like when I will be meeting you next, I'll be discussing all the asset standards together. That's how I do it. I'll be writing all of them together. Like this. Classification of assets. I do a session on classification of assets wherein I'll discuss 16, IAS 40, IFRS 5, IAS 2, IFRS 16 a bit, impairment, all these in one go so that we understand the relevance of them. IAS 1640, difference between fair value model, deviation model, so that how to recognize the difference between the various standards. And today I'm covering IAS 1 and IAS 8 and the conceptual framework and the introduction around IFRS. So I'll be limiting myself only till 3 standards today: the conceptual framework, IAS 1 and IAS 8. That's it. Will not go beyond it. So the 5 elements of accounting remains the same. We need to refer both practice kit and workbook, both, Prateek. Revision kit and textbook, both. So hope the doubts around using Ind AS are clear. Like there will not be use of Ind AS again and again. It was just to introduce IFRS to you, how we are related to it in India, how it is related to other countries in the world. Some countries' reference is needed. Okay. So that doesn't mean that we'll be learning Ind AS. I'll be teaching you Ind AS or CA Final Financial Reporting Ind AS. We'll be referring to the paper strategic business reporting based on IFRS. Hope this is clear. BPP's material is better. So you need to attend my lectures. You need to go through the content, read through the content, and immediately practice with the questions. One big mistake people do is they read the answers while they're practicing. Please don't get into this habit of reading the answers. Just form your own answer, write your own answers, then you can compare. But don't immediately rush to looking at the answer, because that creates a problem for your mind to absorb the content well. Okay. Yes, we'll practice some of them. Palak, like though we will not be practicing all of them, so it will not be possible to practice all of them, but I'll share some big, large questions based on consultation that how to practice them and how to actually implement them. Yes, you need to practice a lot on your typing skills as well as on CB's practice exams through your account. So that will be helpful. Okay. That will share like while we reach end. So as far as liability is concerned, like we were showing some of the liabilities which were in the name of preference shares as part of equity, but in IFRS, this will not be the case anymore. If there is any redeemable preference shares, but there is an obligation to pay, we'll not be showing it as part of equity, we'll be showing it as part of liability. Palak, like we'll try to give like as I progress with my sessions, definitely. But we'll be solving the main thing is consolidation lectures, like which I'll be solving with you, and we'll be doing some practice questions from some other standards as well. Okay. No paper and pen mode, yes. So one thing which people struggle in this paper is that they've not practiced enough on their computers to type, to see through the question and then type, and movement between Excel, Word. So that practice is needed definitely, like, and the working professionals I think are already geared up to do it. They'll not face much of the problem in it. So income statement is divided into two parts. One is realized gain, one is unrealized gain. And in the balance sheet, we have the asset, we have equity. Equity is further divided into the normal equity components like share capital, share premium, retained earnings, but there are other components of equity. Other components of equity has a link with OCI, that is other comprehensive income, like there is any revaluation surplus gain or loss, unrecognized actual gain or loss, fair value through OCI debt instruments movement, fair value through OCI equity instruments movement, any foreign currency translation reserve movement, effective portion of a cash to hedge, they are all recorded in OCI, and the balances at the year end are recorded in the balance sheet. And the movements during the year are recorded in OCI. So this is how the balance sheet is related with the OCI component, and the profit for the year, profit or loss for the year gets added to the retained earnings. That's the normal portion of equity. And the credit side of the balance sheet is divided into obligation to pay, no obligation to pay. Obligation to pay will be liability, no matter the word is redeemable preference share. So this is the big change which will have to shift, and equity will be, if there is no obligation to pay, will be recorded as part of equity. So income statement is divided into two parts. We can use function of expense or nature of expense under IFRS. And income statement has P&L. The P&L for the year begins with other comprehensive income. Other comprehensive income is unrealized gain and loss. It has some limited number of line items, like which has items which may not be reclassified to P&Ls. We divide it in terms of the items which can be reclassified to P&L, which cannot be reclassified to P&L. So these are unrealized gain or loss. How they are unrealized gain or loss? Suppose there is a land which we owned some 30 years back or 40 years back, we purchased it for 5,000. But the real value of the same land in the market is 50 crore today. If we sell it, we realize it in the form of cash. But if we don't sell it, we simply revalue it. The difference in value, that is 49 crore, 99 lakh, 95,000, we record it as an unrealized gain in the form of revaluation surplus. This unrealized gain will be presented in other components of income, will be presented as other components of equity in the balance sheet. In similar manner, if there's any unrecognized actual gain and loss on employee benefits or any debt instrument or equity instrument which is measured under fair value through OCI. So this will be learning in IFRS 9 financial instruments, how this unrecognized actual gain and loss is calculated, or how IFRS 9 measures this fair value through OCI, debt or equity, or how this foreign currency translation reserve builds up. These will be learning in those individual standards. I'll not be getting into details here, but these give us some OCI items which are presented in other comprehensive income. These are the limited number of line items which are presented as part of OCI. This is income statement. The changes in equity will have all these movements, the share capital, premium, the opening balances, the movements during the year, and the closing balances will be reflecting in the balance at the year end will be reflecting in the balance sheet. The statement of changes in equity is the additional balance sheet, which is in addition to the income statement and the balance sheet. The cash flow statement, notes to accounts. There is one more statement known as statement of changes in equity, which you'll be witnessing, which was earlier part of the balance sheet in your previous gap. But in SBR or IFRS, we'll be having this as a separate statement, which is giving us insight on the movement in the other components of equity item like revaluation surplus, fair value through OCI, debt equity item, equity, compound financial instrument, share premium, share capital, retained earnings are all presented through statement of changes in equity. The movement during the period is presented as part of OCI. The balance at the year end is presented in the balance sheet here. The balance at the year end is presented in the balance sheet for statement of changes in equity as part of the balance sheet. Here in the equity side of the balance sheet, share capital, share premium, balances, retained earnings, other components of equity. These year-end balances will be picked from statement of changes in equity, presented as part of the balance sheet. This is how they are interlinked. So these are the 5 statements needed. Statement of financial position, 1. Statement of P&L and other comprehensive income, statement of changes in equity, statement of cash flows, and anything which we could not present in these 4 statements will be presenting in notes to accounts. Notes to accounts is actually the schedules. So this is the expectation from IAS 1 presentation of financial statements. IAS 8 I have discussed, accounting policies, changes in accounting estimates and errors. So this is all for today. In the next session, I'll be dealing with classification of assets, that how the assets are classified into various categories and how to view them. So this is going to be my second session, is on classification of assets. Today I focused on IAS 1, IAS 8 and introduction to IFRS. If anyone has any questions around it, please ask. So this is all for the day. So next session will be on classification of assets. I'll be discussing insights on how the different assets are classified. Okay.
So just one question, not able to find, like as you said, IAS 8, how should we, from where should I look into the BPP book? How
See,
exactly?
in your BPP book, there are standards. They believe that you already have knowledge of FR standard. I'm not believing the same. Okay, I'm treating you that I need to share all that knowledge beforehand so that you are able to do SBR well. So I'm building it from scratch, but I'm not getting into word by word detail, but I'm telling you the information which is important and necessary for you. So you will not find this standard IAS 8 as part of your SBR book. It's not available there. Okay. If you want to read around it, you can read from any other FR book or any other directly IAS Plus website or other websites. So you need this information for the sake of understanding SBR well, because if I don't share this information, if I don't share the insights, basic insights with you, then it becomes complex to understand SBR. Is the reason I will be discussing with you almost all the accounting standards of IFRS. They may not be part of your SBR book outrightly, but I will be sharing with you all the IFRSs. Got it?
Okay, so you mean to say we have to study from websites and all, probably?
I've already shared with you the knowledge needed for your SBR. I've already shared with you. If you want to study more, that's a choice. Whatever is needed, I've already shared, but it is not available as part of your book. See, try to understand my psychology or my way of being a teacher. I'm not here to complete the formality of completing SBR syllabus. I'm here to build your confidence, build your knowledge, and you are better off when you go to the examination, not only in terms of IFRS knowledge, not only in terms of preparing for your SBR paper, but also confident about how it works. Okay, that's the idea behind it. If I feel that you will get confused because of using these words like IAS 8 and IAS 1, I think I'll be committing a mistake by not sharing these insights with you. If I directly jump onto the syllabus, like I could have moved on directly to this chapter. See, there is IAS 1, IAS 8. A bit of it will be there somewhere as part of your book. Some idea around it will be there as part of your book. But even if it is not there, it is available. You can read through it. So whatever is needed, I've already shared with you. Whatever knowledge is needed is IAS 8. Whatever I've shared, and I've shared it in more detail than even given in those contents. Okay.
Understood.
I shared it with you how it is practically applicable. So they'll share with you the bare text content. Okay. So I've shared with you exactly how it is practically applicable, retrospective application, first time adoption, applying the effect retrospectively, all things I've shared with you. I hope they're clear. Any doubts, anyone, any questions? So unless I build it up with you, the psychology of IFRS, like there's no point moving on to these chapters like directly, non-current assets. See, if I go in the sequence of the book, you'll be totally confused. If I go with ethics, revenue, if I discuss first with you, now I will go in the direction or in the manner in which the knowledge of IFRS gets built up. I'll not be using the sequence of the book. Okay. Got it. I'll be going based on my experience. Yeah, some bit of it will be there somewhere. Like yes, Palak says that it's on page 29 of BPP workbook. Any questions, anyone? Hope this is clear. Any questions, anyone? So whatever I have discussed is given in these pages, page number 29, 30. So this is all for the day. Yes, Siddhant, I'll share it with you. Kanika, you can purchase it in the hard copy, in the soft copy. You can get in touch with the sales team. Like they'll be able to guide you better. So IAS 8 is discussed here. Who asked me this question? So it's on page number 29, as Palak mentioned. Okay. This is mentioned here. So what I discussed with you, IAS 8, only if it is permitted by IFRS, you're doing voluntarily. How do you bring about the change? What is it? It is rules, bases, principles, conventions used on IFRS, and I shared with you three things like counting estimates, prior period errors. Estimates are applied prospectively, prior period errors and mathematical mistakes, oversights, interpretations, they are applied to be retrospectively. So these 3 pages don't tell what I have shared already with you, right? Is this clear? So how it is implemented, what is the meaning of it is all shared. So if you want, I'll be sharing the presentations around it as well, IS1, IS8 in the next session, before I move on to classification of assets. So this is all for the day. Hope you liked the lecture. So Prabjot, don't worry, like I'll not be teaching you NDAS, I'll be teaching you IFRS. So this was just for the sake of sharing information. Being in the environment we are in, it becomes important to relate to NDAS as well. Okay. The only expectation from you is that you also keep on working through the content, keep on asking questions and be present in all the sessions. If you miss any of the sessions, it will be difficult for you to cover up. So my request will be to be consistent, because that's the key for becoming better in their subject. Okay. So with this, I come to the closure of the session. Thanks for your time. See you again next week at the same time. Or it is tomorrow. One second, let me check. Next session is tomorrow, 6:30 we'll be meeting. Okay. Okay, fine. So we'll meet tomorrow at 6:30. So this is all for it. Thank you. You can share your feedbacks as well in the group, how you felt about the first session. That will be helpful.